7 a.m. Eastern. We're going to speak with Uber CEO Dara Khosrowshahi. Also, Lilly CEO David Ricks shortly thereafter. At 8:15, the July ADP jobs report is due. Economists expecting an addition of 75,000 private sector jobs.
That's poor, man.
That we saw.
You people.
A little bit of cooling expected.
And SpaceX posting higher revenue and a worse than expected loss in its first quarterly report since going public. Revenue was up by 92% versus the same period a year ago. Shares are down by just over 11% in the pre-market. Our Morgan Brennan covers SpaceX.
Here comes the fear-mongering.
Morgan, there's a lot to dig through with this.
No, there's
oh my
not.
Gosh. Yeah. So much to dig through. So I'm just going to give you the things that I think investors are focusing on the most right now this morning. Company reporting its first ever earnings yesterday, noting Starlink subscribers. This is the profit engine of the company, growing to 12 million in Q2. Elon Musk and President Gwen Shaw were extremely bullish on that business, especially as Starlink Mobile launches next year as a direct competitor to the wireless carriers. That's actually putting all of those stocks under pressure this morning. Starship moving closer to commercial service will launch the new Starlink V3 satellites to operational orbit on the next flight test. Nonetheless, for investors, it is all about AI. How much cash the company is burning as it looks to deploy 2 gigawatts of compute on Earth this year and exponentially ramp that next year. New Grok models, the Cursor acquisition, more NeoCloud deals, including a new compute lease worth $13.4 billion. This is all part of the aggressive return on investment case that was laid out by Musk on the call.
We are expecting to reach 100 billion plus ARR in December of this year. And it's probably also worth mentioning that our internal projections for reaching $1 trillion in revenue, not ARR, but revenue, have moved up from 2031 to 2030. So prior to the IPO, the financial projections we had were reaching $1 trillion in revenue in 2031. We now expect that to be in 2030. And there's a non-zero chance of that being in 2029.
Musk also disclosing an exclusive partnership with NVIDIA, both on Earth and in space. First AI compute satellites expected to launch next year. That partnership perhaps putting some pressure on AMD this morning amid its own earnings. And CFO Brett Johnson summing it up like this, quote, "We expect the supply-demand imbalance in the compute market to continue. The current economics have translated into a less than 1 year payback on our new capital deployments for compute." So very strong guidance and commentary from the call from the C-suite. Still, stock is lower. It's down 11% right now. Wall Street's digesting cash flow. This translates for the first 6 months of the year to free cash flow that is negative, give or take, $31 billion. Also, you got that first lockup expiration that kicks off tomorrow here. Guys?
Yeah, I think the negative cash flow, the questions about how much they're going to spend. I mean, pretty amazing that they're saying they're going to make it back a year from now, that it'll be cash flow positive, but they're not planning to let up on the spending. And that has some people wondering how long before they have to go back to the capital markets, if at all. I think they had $93.5 billion after the IPO, after the $25 billion debt offering that they had. But the cash spend, Morgan, they said, is not going to drop off. They are kind of planning on spending all the way around. They're going to have to do that for the big initiatives the company has designs on.
Absolutely. And, you know, they said $100 billion in cash and cash equivalents at the end of Q2, to your point. And obviously, CapEx continues to ramp. It was very aggressive within the AI unit. It was $7.7 billion in Q1 and then more than doubled in Q2, to your point. I mean, this is a show-me story. A new company that's publicly traded. You had a lot of noise in the quarter, and you had a lot of big, ambitious, lofty goals and forecasts being set forth here. It's also really sort of at the juncture of this convergence of space and AI. The thing I think investors in the public markets need to keep in mind where SpaceX is concerned is that historically, and this has been the case in the space industry across a number of different aspects of it, when they have said that they're going to set out and do something, especially when others have said it's impossible, they've largely done it. And so when they set out and they say, we're going to take all of that knowledge and all of that hardware expertise and manufacturing expertise that we learned in making rockets and building satellites, and we're going to bring it to AI infrastructure, take it seriously, because they do have that, plus the partnership with Tesla to be able to bring those worlds, hardware and AI, together.
Right.
We have to expand our mind, and we're going to have Mark Mahaney on right now, Morgan, but I was just going to say to you that I still get nervous. Okay, now we're going to start landing reusable rockets on land. And I'm like, it's like, that just makes me nervous that you even think you can do that. And I'm glad no one's riding along, okay? Because I grew up just with with those tragedies that we saw. And just how, it just seems how dangerous trying to do these things engineering-wise is, and how the NASA, I used to have so much respect for, I still do, for NASA, and to be able to do these incredible things. Now we're talking about doing it again and again, shrinking the time it takes to use the same rocket again, to land it on land, and building data centers out in space. It's just hard for someone like me to accept that that's possible near term, and I think maybe it is. Morgan?
I think it's hard for a lot of people to accept, in the sense that a fully reusable rocket has always been the holy grail and something that's never been achieved before. So what they're tackling and how they're trying to do it and how they're trying to achieve it, this is very much a first. It goes back to this idea of SpaceX overall being a show me story. That being said, they've already employed so much reusability, at least in the first stage with their Falcon fleet, and with Starship specifically, if they can get to that full reusability, it's going to start with cargo. There's going to be a lot of cargo that moves before any kind of humans step foot on Starship. But if they can get to that point, you're talking about exponentially more mass going to orbit and beyond at a fraction of the cost, a tenth of the cost of what it currently costs for a Falcon, which already drove prices down something like 90%.
Right. It's a rate limiting step. It's like the holy grail of what, if you want to do this, eventually what his plans are, you got to do it. You got to make the strides
there. That's how the economics work for data centers in space. You need Starship to do it.
All of it, yeah. All right, joining us now. If you're going to colonize the universe, joining us now on SpaceX, which Mark Mahaney, Evercore head of Internet Research. That's jumping it a little bit, maybe, but with Elon, I don't know. Colonizing the universe is Plan B. Or not Plan B, but step 2. It's amazing, isn't it, Mark? And I understand the stock goes down, and we didn't expect it to trade on numbers, or we didn't know what to expect it to trade on when you can't really value it unless you're a big thinker.
Well, okay, yeah, and Musk is a big thinker. I think the stock sort of does trade on 2 sets of numbers. One is how many shares are going to get unlocked later this week.
Yeah.
You know, like with every other IPO, this isn't too surprising. In every major IPO I've tracked over time, I don't know of one that didn't break issue, trade below its IPO price. That's just is the case. You just have these supply-demand dynamics. But the other number that mattered to the market is free cash flow. And revenue came in better than expected. EBITDA came in better than expected. But CapEx came in hotter than expected. And so across the street, you're probably going to have negative free cash flow revisions. I don't think this is all that similar to what happened to the hyperscalers. I'm talking about Google and Amazon and Microsoft, you know, call it 6-12 months ago, when you started to see these really dramatic ramp ups in AI revenue. But the CapEx and the free cash flow, CapEx was going dramatically higher, and free cash flow was going lower. And the same thing's happening here, except the free cash flow losses are going to be greater than what you had with those other companies. So yeah, it's going to be a show me story. My guess is that they'll probably be able to deliver against expectations, but you know, for a while we're going to have this free cash flow pressure on the stock, and the stock's going to trade off that and lock up expirations for the near term, and you know, could be the near medium term. Like we could be talking 3 to 12 months, where you get that kind of pressure from those 2 factors.
Yeah, I understand people invested a lot of money in the stock, but it's sort of a background noise. I just want to watch and see exactly what the next couple of years, what this company is able to do. We heard Morgan say he said he's going to do things, and it's hard to say he's not going to achieve a lot of the things he says he's going to do. Do you think could this be different though? Because we're talking about such a, you know, like I said it earlier.
Yeah, I got you.
I mean, we're talking about colonizing the universe eventually. Is it really possible for us to watch this in our piddly little lifetimes?
I hope we can watch it. I think it'd be great for. I think a lot of what I think some of these goals would be dramatically good for humanity. But moving beyond that, you've got a company here with monopoly, not in a legal sense, but almost in an economic sense, in terms of rockets, launches, and space connectivity. I mean, very strong positions, and this Starlink business is generating a lot of cash flow for the company, and so. It's great to start off with that. Like, there's a structural advantage this company has starting off. Their lead in space, their lead in connectivity is just dramatic. Now, that'll be whittled away over time, but they've got such a dramatic lead that that'll probably help them. And whether they get to $1 trillion in revenue by 2030, I don't know. I'm not sure anybody can have that much confidence in it. But it's going to be, they're going to be several $100 billion in revenue, and they're going to reach that ARR level, pretty close to the end of this year, that 100 billion level. That's really impressive. I mean, it says something about how large these TAMs are, total addressable markets are. This company is really well positioned against that. I think you got a couple of these that are going to be trillion revenue generators. I think SpaceX is going to be one of those. I think Amazon, Google, and I think Microsoft are all going to be in that camp, probably around 2030 or somewhere in that space, that area, that space. And I think it's just exciting for investors. But picking the spots is really tough, and you want to be careful about these free cash flow inflection points. And you need to have free cash flow estimates hold. And right now they're not holding for SpaceX. They're coming down. When free cash flow estimates hold and can start improving, that's when the stock can really outperform. And also you got to move beyond the lockup expirations.
And that's Starlink based. That could be. It almost reminds me of some of the other hyperscalers where the ones that got penalized are the ones that don't have the cash cows that are funding all the other stuff it wants to do. Some of the mundane legacy businesses.
Starlink's going to be expensive too,
yes,
to build out the system.
Right, but they're going to be I don't think everyone realized they might be, on airplanes and providing phone service.
But to get to consumers and really compete, they're going to have to build out. I think they said the
land,
EchoStar system is what they're going to use to do that. I mean, Mark, it is the profitable part of the engine. It's the biggest revenue driver. It's the profitable part of what gets in there. It probably will have to be what funds cash flow at some point. How long do you think before that happens? Because they've got some big competitors they've got to go against there with AT&T, Verizon,
Like buy all of them.
T-Mobile.
Becky, I like the way you set it up. I mean, there's a structural and a financial advantage that SpaceX has with Starlink. And I look at a lot of technology analogies, and to me, it's kind of like Google with search being able to fund Google Cloud growth over a multi-year period in semiconductor manufacturing, and same thing with Microsoft and its software business being able to fund the initial growth into Azure, and then probably with Amazon too. Amazon has its own pocket. Like, these companies have extremely strong core structural and financial centers that generate the cash flow to fund these other investments. I mean, there's always a balance, and for the foreseeable future, you've got sharply negative free cash flow at SpaceX. Not just 30, 40 billion this year, but like 100 billion next year. And that's a tough thing to work through. But again, once you get some conviction that those numbers can hold and aren't going to get worse, and then you start seeing this backlog, it's got to get much higher than where it is now, but it's still an impressive $45 billion backlog for SpaceX. Once that backlog builds, the revenue and EBITDA keep growing at this kind of pace, you will start bringing down that free cash flow mountain, or that digging out of that free cash flow hole. And that's what will get the stock to work, not too dissimilar to what just happened to the hyperscalers over the last year.
Right. Okay. Yeah, it's funny how it all, the AI is in the backdrop of all of it, and got XAI. Mark Mahaney, thanks.
Thanks, Joe.
Okay.
News just out from Disney announcing a short-form video sharing deal with TikTok. This deal will allow TikTok creators to use characters and scenes from Disney movies and television shows in their videos. A curated selection of videos will stream on TikTok and also on the Disney Plus streaming service under a new Verts tab that's designed to capture younger audiences who watch vertical videos on mobile phones. Financial terms of the deal were not disclosed. Disney is set to report quarterly results later this hour. You can see that stock ahead of that, up by about 1%.
It's a weird story. So you can use Disney characters on your TikTok.
You gotta stay relevant, right?
You a big TikTok person yet?
No, but
You know people who are?
the kids.
Yeah. I'm looking at Disney stock, 98. I keep chronological with pandemic 200 or whatever it was, and then 7 magical creatures. And then Jimmy Kimmel was 114. So we are below 100. So, but those are the those are the points in time that
Stick out to?
Yeah, they do. They do. Because I said I'm going to watch this. We'll see if they're making the right, folding to Jimmy Kimmel. See whether they make the right. They're making the right move. But it's probably unrelated, but not my world.
Joe's World.
Joe's World. We used to have that.
We used to have
that. Joe's World. That's right.
All right, when we come back, the latest on the Iran war. President Trump says a deal to reopen the Strait of Hormuz could be finalized today or tomorrow. We've got the details next. Squawk Box will be right back. New details on the Iran war. The White House is aiming to announce an interim deal today that would reopen the Strait of Hormuz and pave the way for further talks on Iran's nuclear program. That's according to Axios. That report says that the United States, Iran, and Oman have been negotiating and are nearing an agreement that for 60 days would mandate ships entering the Persian Gulf use a northern lane near Iran, and those exiting use a southern route close to Oman. No tolls would be charged during that interim period. Asked about the report, President Trump said an announcement could come today or tomorrow. to this point, the ships that have been going in and out have been kind of hugging the coast along Amman's coast on the southern route of that. Not sure what would be the first ship to go on the northern route.
Once again, it seems like you listen to the scuttlebutt, and we're powerless to do anything about the strait, and Iran's in total control. Why does oil listen to what everybody else says is just bluster from the Trump administration? Yesterday, Scott Beth, and I was thinking about that yesterday, whether, the president, he likes to be in charge, and he is. But, so he's been saying, we're going to do this, but yeah, we're close to a deal. Bessent has a lot of credibility on a lot of different issues. And I think he's gotten more and more and more as we've watched him and how he does
He's got a huge
it.
portfolio that he is managing.
He does, but when it's like the president would say, no, wait a minute, I've been saying this, that we're going to have a deal. When Bessent says it, suddenly everybody sits up and...
also said it right here on...
I know, but it was the same thing. He said it this way.
Yeah.
The president has been saying we're close to a deal over the way. He's been saying it for the last 4 days. The same thing that Bessent said. Bessent said it, and oil drops $8.
Right.
I think the president is like, I'm glad, and I like that, but better watch yourself, Bessent. Right? You don't. I don't think he's overshadowing the president. I think that he's doing a great job, but knowing the president, it's like, hold on there, fella, getting a little big for you.
I move the markets, not you.
Yeah.
Is that what you're...
And normally, I don't think people that win in Augusta are allowed to take their jacket.
Why did I tell you that? I know, I mentioned this is the jacket.
I don't think they're allowed to take it away from Augusta Masters champions.
They made an exception in my case.
They made an exception. Gotta say.
I did say right before we came back from break, this is my Masters jacket.
You know, if you say something, it's not going to last long.
I thought maybe if I said it, I'd cut you off at the pass. If I
Instead,
said it
you
first,
just caused it.
Yes.
But just remember whenever it is April, you got to do that again.
I will.
Okay. Coming up, Chipotle. Who won this year? That's how.
Was it Rory?
Yes.
Right.
To complete his whole, I think, or was that last year?
I think it was this year.
Chipotle trying to get out in front of a salmonella outbreak that could be really? Now Chipotle got the salmonella.
Well, and it's not lettuce, which is the other concerning thing. We're going to talk more about that.
I put my toe in the water yesterday.
You ate Taco Bell?
I did.
Well, I think
Just
it's
a
probably the
couple.
safest place to eat at this point.
Safest place to eat.
Yeah.
Ingredients, key ingredients, details on that story next. Squawk Box will be right back.
It was.
This is the royal we, in this case, are watching the shares of Chipotle. I haven't looked, but now I'm seeing it down, down 10%. That was yesterday. The restaurant chain said it had removed the jalapeno peppers from some of its locations since they could be linked to a salmonella outbreak being investigated by where everything bad in the world is happening lately. Minnesota.
The other one was Michigan.
Take it. Canada. We'll take the western part of Canada. You take Minnesota. So far, the state.
You mean the election, not the Taco Bell stuff. That was Michigan.
Michigan.
Yeah.
I'm talking about everything. Medicare for Medicaid for everything. I mean, it's that guy. It's that Tim. Public health authorities. So far, the state has identified 110 cases, Minnesota cases, and officials say that the food was making people sick, was likely served at other restaurants as well, though she noted she wasn't concerned about Chipotle. In a statement, the company said it had pulled the jalapenos out of its food in an abundance of caution and replaced them with products from different growers.
Man, this has been a summer.
Yeah. Summer of diarrhea.
Summer
Just
of
call it
love
what
is
it-
what they had.
call
My
it
mother
what it
had in
is.
her day. We get the summer of diarrhea.
Is that what salmonella? Is it the same as the stuff that
I don't know
explosive?
if
It
it's
might be different than
explosive.
cyclase.
I think this may get you. Salmonella probably makes you vomit.
Yeah.
Probably gets you before it gets that low in the intestinal
It's
tract.
like common.
Happy breakfast, everybody.
Yeah.
All right, when we come back, how AI is poised to drive change in manufacturing across the country and how things are already shifting. After a break, we will speak with the CEO of Rockwell Automation. Right now, though, as we head to a break, let's take a look at yesterday's S&P 500 winners and losers.
Disney finally reported, told you they would. It would. Julia Borson joins us now with more. Hey, Julia.
Good morning, Joe. Disney reporting an earnings beat with revenue coming in just short of estimates. Adjusted earnings of $2.06 is 20 cents ahead of estimates. That's driven by 20% growth in operating income in the experiences division. Revenues of $25.25 billion is just below the $25.4 billion estimated, and the company's full-year guidance for adjusted EPS growth of about 16% is ahead of estimates of 14.9%. We see shares up 2.3% on this news pre-market. Now, Disney is also increasing its share repurchase plan by $1 billion to $9 billion. I spoke to Disney's CFO, Hugh Johnston, who told me, quote, Walt Disney World did terrifically well. The domestic guests were up 3%, so very strong attendance. And you all probably know that those numbers are somewhat different from what you would have seen from our competitor down there. Right then, Johnston was taking a rare dig at rival Comcast, which reported some weaker numbers in Florida. Now, Johnston also flagged the double-digit revenue growth of Disney's direct-to-consumer division, saying they expect D2C to continue to be a growth driver, saying, quote, that the bundle of Disney Plus, ESPN, and Hulu is reducing churn by a material amount, saying as churn goes down, we don't need to spend as much money on marketing and we build a deeper relationship with the consumer. Now, the other news out this morning, Disney announcing a partnership with TikTok to bring fan-created content about Disney brands to Disney Plus. Now, just to put this in context, this is about a broader push around what Disney is calling Verts, the short-form video content that is putting on Disney Plus. YouTube is the largest company in the world when it comes to content consumption. Disney really leaning into that short form video to bring more of those YouTube style viewers over to Disney Plus, or at least keep them watching. Joe?
What do we think, Julia? Is this the model that stays? Will Walt Disney look like this in 5 years, do you think? I mean, Comcast doesn't look anything like
I
it
think if
used
you
to.
look at the fact that with the stock up pre-market, I think this earnings really, to me, tells two stories. One is that the theme parks are still strong. Concerns about macroeconomic issues weighing on consumers, concerns that Comcast flagged about domestic weakness. That's just not what Disney is seeing here. And then I think this broader question of whether Josh D'Amaro, this is only his second earnings as CEO, whether he's going to really be able to turn the streaming business into a true growth driver for the company. When I asked Johnston that, the answer was, from Johnston's perspective, definitively yes. They're really leaning into this bundle, this idea that Disney Plus is going to be a hub for all things Disney. For consumers, it will be your sort of new entertainment hub. This is something that D'Amaro has been talking about a bit. I expect we'll hear about it more on the call today, and then we'll probably get more about this new strategy from D'Amaro at Disney's D23, which is their big fan conference, which is coming up at the end of next week. So this thesis that parks are a profit driver now, and that you're going to see the direct-to-consumer streaming business continue to grow, it seems to be playing out in these numbers, even with different areas of slight weakness.
Right. That's what I'm talking about right there. And if you go back further, it was 200.
Yeah.
It was 200.
The stock, yeah, the stock is down so dramatically. It was interesting going into earnings. 90% of analysts had a buy rating on the stock, reflecting that decline, and some questions about how the fundamentals of this company would continue to play out. There were still these elements of weakness in that, warnings that Moana, the live action Moana, did not perform as well as expected. But they're talking about ESPN viewership gains. The fact that they have sports rights really locked in for the next couple of years does bode well for their ability to navigate some of those higher costs that other companies are grappling with.
I just meant, so this still works. You do the movies, you make the characters, you put them in the theme parks. There's the, I don't think.
Well, no, I think it's.
Go ahead.
It's a different strategy now to really lean into the streaming bundle. It's not just about Disney Plus and ESPN. The idea is that if you could get people to subscribe to a new entertainment bundle. And if they can get everything they need from there, including maybe they keep watching those verts with TikTok content instead of getting distracted by something else on their phone, that's the new strategy. This idea of what Josh Marr's been calling One Disney, that's really what he's going to be leaning into. And then ultimately you'd probably be buying everything you need for the theme park on that app as well. That's the new strategy, and I think that's what he's hoping will answer that stock chart that you're looking at.
I'm just trying to come up with the perfect media company for the future, taking in everything that we know right now, whether it's Netflix or someone we're not even calling a media company that finally, or Disney or because I don't know where all the value destruction. It hasn't been. Someone hasn't aggregated all the market cap losses in all of media, have they? What the hell happened? It's supposed to be the golden age of media with content and everything else. Why is it digital nickels versus analog dollars, or what happened? Do you know?
I think there's a lot of that, and I think it's just to tie it back to the TikTok news this morning. So much entertainment consumption has gone over to these platforms, or to the likes of YouTube or TikTok. And I think there's been a real question about the strength of the box office. Disney continues to dominate the box office overall, but then you have some of their bets, like a live action Moana, not playing out the way they might have wanted. Traditionally, the studio has been the driver for every other piece of the Disney ecosystem, and I think the question really is whether those films keep delivering, so people will then want to be engaged in everything else that Disney does. Toy Story 5, a positive example of that paying off.
Okay. Well, I'm blaming everything on TikTok. I knew it. The Chinese knew this all along with the brain rot that we're seeing in our children.
There's only so many hours in the day, right? Where your eyeballs go.
To TikTok?
Well, maybe not yours, but young.
Yeah, a lot of yeah, and then you end up a socialist. Anyway, thank you.
The world according to Joe. Joe's world.
Still going.
All right, CVS Health out with quarterly results as well. Those earnings just came in at $2.58 a share. That easily beat the estimates of $1.85 a share. Revenue was $106.1 billion, and that was well above the $100.1 billion that was expected. CVS is also raising its full-year guidance and says it now expects revenue of at least $414 billion compared to estimates of $409.2 billion. The company's also revamping its weight management program, collaborating with Lilly to make Zepbound and Foundayo available through the CVS Healthcare app. That stock is up by 5% on this news.
Probably talk a lot about weight. Yeah, with Lilly about the weight loss
David
stuff.
Ricks a little later this morning.
Coming up, the CEO of Rockwell Automation is going to join us on the growing influence of AI in manufacturing. And then after that, this gentleman, Dara Khosrowshahi, the CEO of Uber, when his company reports in just a few minutes. And a reminder, you can get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We'll be right back. results just out from Disney. Hello. Wow, $60.
Lily, you said Disney.
Oh, I did? No way. Oh my God. Lily, no, Disney, no. Lily, results just out. And because I was focusing on, oh my God, and I was looking at the market cap, 1.05 trillion. The only pharmaceutical company like that. Totally distracted by what happened at 838 was well above estimates of $6 a share, and revenue jumped 48% from a year ago to 22.97 billion. The estimate was 20.7 billion, driven primarily Mounjaro by Mounjaro and Zepbound volume. Worldwide volume increased 60%, including 37% growth in U.S. Mounjaro sales. U.S. Mounjaro sales themselves surged 91% from a year ago to 9.9 billion in a quarter.
Wow.
Zepbound sales increased 46% to 4.9 billion. Lilly is also raising its full-year revenue and earnings guidance.
That drug's
How is anyone still fat? I mean,
$40 billion.
I still look around. There's a lot of candidates for these drugs, right? Still around.
Avert your eyes. Stop looking at me.
I mean, no, I'm not looking at you. But a lot of, do you run out of? I guess you never run out of patients in this country, right? For obesity.
Yeah, I mean, look, you run out of potentially patients who can afford to pay.
Maybe I was walking by a mirror. That's what I was.
But you run out of patients who can potentially afford to pay. But man, there is demand for this.
Unbelievable.
Yeah.
I hope
people lining
up. I
up.
hope it's all fine. I think it is. I think it has positive side effects instead of negative side.
That's what we've seen so far. The idea that it can attack a lot more than just the diabetes or the weight loss that it was going out after.
Well, David Ricks.
I can't wait to talk.
I doubt if he's going to cancel his interview.
No, looks pretty good. When we come back, the CEO of Rockwell Automation will join us. This company is at the forefront of AI and the impact on manufacturing. We're going to talk to him about his earnings from last night and much more. Squawk Box will be right back. All right, welcome back, everybody. Our next guest will weigh in on AI's impact on manufacturing. Joining us right now is Blake Moret. He is Rockwell Automation's CEO and chairman. The company reported fiscal third quarter results yesterday after the bell. And Blake, thank you for joining us this morning. Let's talk a little bit about this. Your earnings were pretty impressive. $3.49 a share, up 22%. That compares to $3.38 the street was expecting. $2.3 billion in revenue, up 8% from a year ago, and that was versus just 2.2% that the company that the street was expecting on some of these things. The stock was down for a little bit yesterday after the bell, and I'm not sure I understand why. You raised earnings guidance for the full year above what had been anticipated. What happened during the quarter? What do you expect from the street's reaction? And this morning we're looking at the stock up by about 79 cents.
So we're happy with the results in the quarter. It represented a broadening of growth in multiple manufacturing end markets. So we've been talking, of course, about our participation in data centers and semiconductor, e-commerce, warehouse automation. But we saw additional strength in automobile manufacturing, as well as life sciences, pharmaceuticals in the quarter, and energy continues to be a growth area for us. So we had good growth. Our enterprise margins were up 280 basis points from the same period a year ago. So we're happy with that. High expectations of where we are in the market.
Yeah, coming on high expectations. I hear what you're saying with that. That stock has been pretty impressive, not just year to date over the last year, over the last several years. Automation has taken a new leg up when it comes to AI and when it comes to how this works. What do you hear from companies? What do you do in a situation? I know you guys go into a company that has maybe legacy equipment, maybe some limited visibility and conveyor inputs that are kind of limiting or restricting some of the material flow that goes in. What can you do when you go into a plant to kind of help them out with some of those things?
Well, a big part of our current success is adding new value to our traditional processes. As you said, in the past, providing control of movement, conveyors, machinery, being able to control variable speed drives and the speed of motors. But with AI, you can simplify that process and add additional productivity. I think in multiple dimensions, it's about the way that humans interact with the technology. It's about the way that you can integrate multiple different applications using agentic AI to teach skills, to be able to get additional value and insight from your processes. So we really see it having an effect already today through the design, the commissioning, the operation, and the maintenance of these systems.
Explain a little more in detail, Blake, just about the AI agentic work that you can do on some of these things. Give me an example. How would that look in a car factory? How would that look in a data center?
Sure, absolutely. So I'll give you examples of both. Think about the use of machine vision in automobile assembly, in packaging of food, things like that. You get the frame, the image that's captured by the camera, but with AI, you can draw additional insights in real time and actually improve the performance of the machinery by getting those insights from the artificial intelligence and being able to make decisions on the fly about exactly the right way to optimize the speeds of your machinery. In a data center, think about the chillers that are in that data center, the cooling, and by using the artificial intelligence to take data from your supervisory control and data acquisition system, you can optimize the efficiency of that chiller. You can look at what the ambient air temperature is, and you can use the AI to improve by a few percentages of productivity, being able to draw less energy to run those chillers. And over 24/7, over many years, that's a big savings.
Like, we've got to run, but what's the limiting factor? Is it trying to get a hold of semiconductor chips? Is it making sure that there's plenty of liquidity so that companies can afford these upgrades?
I think it's the human enablement to understand all the power of artificial intelligence and to be able to apply it in these real-time control systems that are running in plants today.
Blake, thank you for your time. Again, the CEO of Rockwell Automation. We appreciate it.
Yeah, thank you, Becky.
Okay. Squawk Box will be right back.
It is 7 a.m. on the East Coast, 5 a.m. here in Aspen, Colorado, and you're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. We've got a huge lineup today from the Aspen Economic Strategy Group meeting, starting with Bank of America's CEO Brian Moynihan, then Minneapolis Fed President Neil Kashkari is going to be with us, and the COO of Goldman Sachs, and then Janet Yellen, former Fed chair and former Treasury Secretary, guys. So we've got a lot to talk to them about, obviously everything going on in the Strait right now and whether there's a deal in place and what's happening. Plus, all of the situational awareness stuff is a big topic of conversation here. And we're going to go through all that and more.
All right, we will talk about all of that coming up. And Andrew, I have a secret to share with you a little later. But first, let's get a check at the U.S. equity futures at this hour. It looks like the Dow futures are up by about 150 points. S&P futures up by 16. The NASDAQ off by close to 60 points, but it does come after a very big day of gains for the markets yesterday. Check out energy prices. That's what sparked the latest rally that we've been watching in the equities prices. This morning, you'll see WTI is up by just 50 cents, $76.30. Brent is trading just above $80 at $80.64, and yields on the Treasury yields have come down. The 30-year is sitting at 5.16, the 10 years at 5.61, the 2 years a little bit higher. It's at 4.20, Andrew,
You're going to wrap me out on the protein drink.
I am.
I know you so well.
He finally
What's
came
the
up
secret?
with what you
What's
wanted,
the
Andrew.
secret?
Hold up the drink here.
She's ratting me out.
I am.
I'm
This
trying
is his
your.
first sip that you have been telling him to try.
I'm trying
for a long time.
your kale infused coffee.
Coffees with protein.
No, there's
And
no protein.
He said like this. He goes, pretty tasty. That is exactly what he did.
It's great, right?
Andrew,
It's great.
I did put some sweetener in it. 2 little packs.
Okay.
Is that okay?
How'd you know I was
That's
gonna
okay.
write it out?
Because I just know you. I know you're gonna rat me out and
Did
tell
you
me that
hold
Andrew
on?
was.
Are you drinking? You're drinking the hot coffee with the protein in it, or you're doing the iced coffee with the protein in it?
The hot coffee. Should I try that? Should I do the ice tomorrow?
I'll be back tomorrow. I'll bring you iced in the morning tomorrow. We'll do it together.
That might be nice if we.
No.
Can we do it
I
like
had
this?
to tell you.
Can we do it?
Can
we do it like that?
Make
Like
him
we
say
do?
you were right, Andrew.
Thank you, Becky. I appreciate. You know.
That be the very first time it's been necessary for me to say that. No, I'm kidding. Shares of SpaceX are falling. The company reported a loss, 9 cents a share, and that was narrower than the 26-cent loss that the analysts were expecting. Revenue jumped 92% year over year to $7.8 billion. That topped expectations, but six-fold jump in capex to $18.4 billion. Looks like it's what is spooking investors. SpaceX said the majority of that spending was going towards AI. COO Quinn Shotwell, though, said that on the call that SpaceX plans to go after AT&T, Verizon, and T-Mobile. Customers with its all those customers with its forthcoming Starlink mobile service as early as next year. It's also planning to build out a terrestrial network in the U.S. using spectrum acquired from EchoStar, and that implies that it already has an extraterrestrial network built out, but it's a different use of the word. Those telecom stocks falling in early trading. Andrew.
Meantime, we've got some news just out. Uber reporting earnings of $1.17 a share, topped estimates of 81 cents, marking the company's first earnings beat in 3 quarters. Revenue $14.19 billion. That's slightly below expectations of $14.24 billion. Gross bookings totaling $58 billion. That was ahead of estimates. And delivery bookings also topping expectations, while mobility bookings came in slightly below estimates. Want to talk about all that and more. Joining us right now, the company's CEO, Dara Khosrowshahi. Dara, it's good to see you this morning. As we said, you beat on the EPS number. The revenue piece came in a little light. What's your take on what happened there? And is that something that's happened there?
Yeah, the gross bookings of the company, we grew 22%. It was actually an acceleration over Q1 of 22%. Revenue grew 14%, which is lower than gross bookings, but that's actually because of an accounting change that we had in the UK. We changed how we account for revenue in the UK, so I wouldn't call that a fundamental issue in any way. And then you saw our adjusted earnings per share up 35% on a year-on-year basis. And we had free cash flow over $10 billion over the last 12 months, which is a record high for us. So the business continues to execute incredibly well, very healthy across both the mobility business and the delivery business.
Couple other things that were interesting to me. Prices have declined. You know me, I love a lower price, but I don't know if it's probably not good for the business. In places like LA and San Francisco?
Yeah, so we have actually had some wins as it relates to insurance. And one of the most significant causes of price increases in mobility in the U.S. have been insurance. There's tort reform going on. Hopefully, it's going to bring the cost of living down. And that also includes the cost of Uber. So where we have gotten some relief as it relates to insurance, we put that back into price, lowered prices for consumers in a lot of markets, for example, in California, and we've seen an acceleration in terms of bookings in those markets. So the U.S. actually continues to be really healthy. Growth in the U.S. accelerated both in mobility and delivery Q2 over Q1, and part of it is because of some of these insurance savings that we're giving back to the consumer.
What are you seeing in terms of the consumer strength itself? You know, here at this Aspen Economic Strategy Group meeting, there's just conversation after conversation just about how healthy is the economy itself. We spoke to Scott Bessent yesterday, who talked about how he thinks there's no longer a K-shaped economy. He thinks it's something he's describing as a C-shaped economy. What do you see?
We're seeing something similar in that the consumer broadly, as you can see, is strong, and that's why our overall gross bookings actually accelerated quarter by quarter. We're not seeing any signs of trade down. We're not seeing smaller basket sizes. Consumers remain generous in their tipping, for example. Sometimes if someone is feeling pinched at the pocket, they might pull back on tipping. None of that is happening. And at the same time, we're seeing actually earners, our drivers, for example, their earnings per utilized hour are up 8% on a year-on-year basis. So the labor market for blue-collar market, to some extent, we represent the spot market for labor. And the labor market is strong in the U.S., which is reflected in our earners making more money, I think, than they have for the past couple of years, with their earnings per hour up 8% year on year, which is super, super healthy.
Okay, since you raised it, I should just go there, because it's not an earnings story, it's a tipping story. What do you think, what's the average tip these days? What's a fair tip? Because I know years ago we had a conversation about how when Uber was first built, the plan was for no tipping.
Well, Andrew, you don't want to ask me. I'm the CEO of Uber, so I'll always encourage you to tip 15 to 20% on a ride or a delivery. I think it's up to the customer. I mean, the whole point of tipping is pay for the service rendered. So if you get a great ride, if you get that delivery on time, put a good tip in there, because there are real people who are giving that service, and show your appreciation.
One other piece, it looks like, we keep talking about spending, how much people are going to spend in CapEx, big tech companies. You plan to spend about $10 billion, it looks like, over the coming years.
Yeah, that is investment that we're making in the autonomous vehicle ecosystem. As you know, AVs represent a very important future of mobility. We are partnering with the entire ecosystem. We've got partnerships with over 30 AV players. We're going to be in 15 markets across the world by the end of the year. So we're leaning forward and investing in AV, whether that's in partnerships like Wave or Wabi, or whether that's vehicle commitments with partnerships with Lucid and other OEMs like Rivian, to make sure that we have enough AV vehicles when this technology hits a prime time. We think it's worth the investment. Obviously, with $10 billion of free cash flow on a 12-month basis, we've got the balance sheet and, more importantly, the cash flow to fund these kinds of investments for future growth.
Hey, Dara, you've been pretty clear about your plans on this growth for a long time, so maybe your shareholder base is pretty well informed on some of these things, but I can't help but think it's the same sort of transition that a lot of these hyperscalers have made, where you had companies that were very CapEx light, software companies, that were bringing in a ton of cash and didn't have to put out much CapEx. How do you think about things as you make that transition yourself? You were a very CapEx light company. You see the future being in these robo-taxis. It's a huge change in the business, though. What are the advantages? What are the disadvantages? And how do you manage that transition?
I think it is, Becky. It's absolutely a change in the business, and it's something that we are managing carefully. In the early kind of iteration of the business, there is no kind of financing model out there. There's a question as to how much is an AV worth? What's a residual value of an AV? None of these things have been established. So in the early iterations of AV, we are going out, we're investing with our own balance sheet, and we're doing it through cash flow, which is pretty important as well. We're not taking on a bunch of debt for this stuff, to establish the business model of AV. What we're seeing very early on is that we can drive a lot of utilization of these cars. It is well over 20 trips per vehicle per day. In some markets, it's over 30 trips per vehicle per day, which creates kind of a monetization model that then we can take to financiers. And for example, we have established a financing vehicle with Santander, who is very kind of lean forward in terms of innovation in the financial space, so that we can fund both EVs, which we do, which we're continuing to increase in our traditional business, as well as AVs as well. So early on, it's going to be on balance sheet. Over a period of time, this stuff is going to be kind of financed by industry. It's an age-old trend, and we're just very, very early in the development of this industry, which is why we're leaning in to innovate for the entire ecosystem.
I can't believe it. I'm coming into the future, but I had to use it for a very specific reason yesterday to pick up a car that was left somewhere. So I had to use an Uber, or I would have had to walk. But the guy, I mean, we may like keep in touch. Swear to God,
That's awesome.
Anthony. Yeah, he wrote, talking, but the amount of money he's making per day, I said, no, that can't be right. And he goes, yes, it is right. And if he would have said, yes, I'll do New York trips, he could even have made more than that. He said one of the ways that he makes so much is he'll do it all, whatever Uber offers. He said sometimes if he's done an Uber Eats, people don't like the smell that's remaining in the car. He said that was a major problem. I'm just wondering, have you heard that before? And is it, I don't see how you can do anything about that. Can I ask for a non-smelly car when I'm asking for an Uber?
You know, Joe, it is sometimes an issue. It's not an issue that happens often. And the thing is, these drivers, they are entrepreneurs, and they, you know, he's aware of exactly what happens when he takes Uber Eats and Uber Rides, et cetera. So he's essentially running his small business. We give him a ton of opportunity. He can accept rides. He can accept deliveries. He can now go shopping for groceries as well. And as you can see, the earnings are very, very healthy, but it's ultimately up to the entrepreneur to decide what they're going to do with their time. And we want to give them all the tools and all the opportunities to do so.
Dara, I just want to go back to the autonomous vehicle piece of the story for just a moment, because the other thing that's happened, I think, since we last saw you is it appears that the partnership that you've had with Waymo, collapsing, falling apart, maybe you're not having it anymore. You tell us what the state of affairs is with Waymo and what that looks like long-term or not.
Well, Waymo is a really important partner of ours. Now, they're not the only partner of ours. We are in market with them in Atlanta, in Austin. We'll continue to do business with them this year, going into next year. But really what we're developing is a full ecosystem of AV. And Waymo, you know, is the leader now, but just like you saw in the foundation model space, you had OpenAI, who was the only leader, the only kind of game in town. Then you got Anthropic, and you had XAI coming in, and Gemini coming in. And then now a bunch of open source models, whether it's Kinney or many of the other open source models out there. It's a very, very competitive space. And we're seeing the same thing in the physical AI space as well. Just yesterday, NVIDIA released their Alpha 2 model, which is an open weight physical AI model, which is pretty incredible as well. So we have a strong partnership with Waymo, but it really is an ecosystem that's going to power our growth going forward.
But in cities like Phoenix, that partnership appears to have ended. Is that is it going to be city by city? Or?
In Phoenix, we were less than 10 cars, so we decided it kind of wasn't worth it to continue. We'll see where we go with Waymo, but more importantly for us is the entire ecosystem that we're powering and the amount of innovation that's going into that ecosystem.
Right. And then finally, I have to ask, because there was a big story in the New York Times about, passengers who have been sexually harassed in vehicles, lawsuits that have happened as a result of those, and the position that Uber has taken, which seemed at odds, at least in the article, with some of the public statements that the company has made over the years. And I just wanted to get your reaction to that.
Yeah, Andrew, anytime there's a sexual assault on the platform, it's heartbreaking, which is why we've invested so much in safety, whether it's the ride check technology that we have, or record my ride, or track my ride, or even video or audio recording on the ride itself. As part of those efforts and as part of our commitment to safety, we ended mandatory arbitration as part of our service, and victim can decide whether or not she wants to settle privately or go to court. And the thing about the court process, unfortunately, is that it is adversarial in nature. You've got to ask questions. It can be unpleasant, it can be uncomfortable, but that's what the process is, especially when people are looking for a bunch of money. And anytime we ask questions of the victim, we do so in a respectful manner. And what was not included in that article was the judge presiding over the federal cases saying specifically, I want it known that Uber has not engaged in anything that would be considered shaming the victim. that somehow didn't find its way into the article. So these are the really unfortunate circumstances. We deal with them as gently as we can, with respect, and the judge absolutely recognized that. But this is part of the law, and it's just a tough part of something that we've had to face.
Dar, I want to thank you for joining us on this earnings day, but also answering so many of our other questions. We look forward to seeing you again very, very soon.
Thanks very much.
You bet. Joe?
Well, coming up, we just told you about Lilly, and now CEO David Ricks is going to join us to look through the numbers. Then at 8:15 a.m. Eastern, we'll get the first jobs data that we'll get this week. Of course, ADP and the private payroll report. Squawk Box coming right back. All right, here's Lilly out with its second quarter results earlier. We already talked about some of these outsized gains in revenue and earnings, all of it based on the well-known names of Mounjaro, Zepbound. Join us now, Eli Lilly, Chairman and CEO. David Ricks, let's bring up the chart. That's why I was talking about it. Good to see you. I don't want to immediately take you off the screen, but I think you'll be glad we're showing this as well, up almost 6% now. $1.07 trillion company, Mr. Ricks, not too shabby. But the numbers, it's hard for us to know how outsized they actually are versus expectations. Because it's just growing so rapidly at this point.
Yeah, absolutely. It's really strong start to the year for Lilly. You know, we're celebrating our 150th year as a company, and it's hard to think of a time we've ever been in a better position than this. Team's executing incredibly well. We're, participating in probably the largest pharmaceutical segment ever, and we're leading it pretty much everywhere in the world. And you see those results showing up with the Mounjaro and Zepbound performance. We're a big company growing at 48% year over year. That's incredibly strong. And, we're not just an obesity company, Joe. We're also building out a really strong oncology business, our neuroscience franchise with Kisunla and Alzheimer's doing well, now a market leader there. And we're not resting on our laurels. We're pleased but not satisfied. We're building a lot of value for the future in business development, in our pipeline, It's really a great time to be at Lilly, and strong performance. Really proud of the team in Q2.
Mounjaro almost at 10 billion in the quarter.
Yeah.
The flagship injectable medication, Zepbound up 4.9 billion. Everything beat expectations. I don't know why analysts are so low on a lot of these. I mean, they had $6 for earnings, and you earned $8.38. So obviously the company is outperforming, but some of these people gotta, I don't know, wake up and smell the coffee for this. 85 to 87 billion now in revenue. Indicated you were at 82 to 85, so even you were underestimating. Was it the demand or the amount you'd be able to supply or reimbursement, or what are the the unknowns that allow you to not exactly be able to tell what you're going to sell?
Yeah, it's an important question. I mean, obviously the supply situation, we've done a great job executing and have no issues there globally. It's really, I think, the estimate of how much market expansion is available to Lilly as the market leader. And I think what we're finding is a strong signal there. It's difficult for analysts to see the ex-US business. There's not that weekly cadence of consumption that we get in the US. And here again, I think an upside beat in a pretty big way our own expectations, but also the streets with Mounjaro global adoption. And here, Joe, most of this is people paying out of pocket. And in big middle-income countries like Brazil and China, India, we're seeing very strong and durable demand for Mounjaro. And here, people are paying, with their own money that's not insured benefit, really strong. And then, in the U.S., I think we've got two big tailwinds that are happening. One is the launch of the oral therapies have really expanded the market, not cannibalized it. Even though they are offered at lower prices, we're seeing about 8 out of 10 new oral users are coming from people who've never used one of our brands, the injectable versions. And then the second is expanded access. I know there's a lot of reporting on insurance coverage from employers. That's about flat right now, but we are seeing new states in Medicaid, and of course the federal government starting July 1st with the federal Bridge program, which allows Medicare beneficiaries, seniors, to access Zepbound and Foundayo for $50 a month. That's off to a strong start. And as you would imagine, those cost points are important, and people know about the broad health benefits, and I'm convinced actually that move by the Trump administration is going to make a huge difference in Medicare costs, but also longevity for seniors. We're excited by the Bridge program.
So Novo, heated competition obviously with your competitors. How does the Foundayo introduction at this point compare to the competing Wegovy pill from Novo Nordisk? Initially, wasn't the Wegovy pill that pill far ahead in terms of scripts?
Yeah, I mean, they are ahead in scripts. We expected that, I think, because they launched first. They're using a brand name everyone knows, and it's a molecule doctors know. Foundayo is a new medicine with a new name, but we're really pleased with the start, and this product's accelerating as we speak. We had to build the awareness with physicians. Our salespeople go out and talk to doctors about the new medicine, and we had to get access to formularies. I think CVS added us June 1st, and that's a new expansion for us, along with United Healthcare and Express Scripts now cover nationally Foundayo. And of course, the Bridge program with Medicare beneficiaries now have access. And finally, turning on the consumer activation, which is just really starting now, Joe. But just in a month, we've basically doubled consumer awareness, and prescriptions have basically doubled in a month for Foundayo. So we're pleased. Right now, about 1 out of 4 new starts on an oral for patients who want an oral are starting on our medicine, and that's growing each week. So we're in good space there. And I think the best news here about the oral category is it's really expansionary. It's not cannibalizing Zepbound. In fact, Zepbound actually accelerated during these oral launches with new starts in our market share there. So I think the big concern last year from the street was how much growth could there be? Is this just a business where people are going to cycle on and off the therapies? Is it limited by insurance? I think what we're seeing in the first half of this year and with Lilly's results is really strong underlying demand and expansionary forces that are really driving broad use of the category. But still, 1 in 8 Americans are using a branded GLP-1, 1 in 50 outside the U.S. So lots of opportunity for further market growth.
incredibly impressive watching how you've run the company, watching how you've completely dominated on GLP-1s. It's hard to kind of find anything to bring to you to say, what about this? But I'll try anyway.
Okay.
Look, the prices outside the U.S. for Mounjaro are much lower than they are within the United States. I think it's $150 to $450. You talk about consumers kind of paying their own way there. Lower prices are probably part of it. That's on a monthly basis. In the United States, it's above $1,100. It's tougher. You have municipalities that are kind of saying, we offered this to teachers and policemen and firefighters in our contracts, and it's breaking the bank. They're having to raise property taxes as a result in some of these. And this is GLP-1s writ large, not just Lilly on this front, but you guys are the leader. The pushback from that, how do you expect that to play out? Because your profit margins are so much higher than your peers like a Merck or a Pfizer. I think you guys have a profit margin of 37% versus 11 to 14% for some of those other big names. How do you maintain that? Is it a situation where the president's been pretty clear that he doesn't like lower prices outside the United States? Do you raise prices outside the United States? Do you lower prices within the United States? I know you were talking just about some of these programs like for seniors, but how does this work out over time in terms of protecting your margins?
Yeah, well, first of all, just to level set the facts, Becky, and I appreciate the question. These drugs did launch at over $1,000 a month. That's no longer the case. Really, nobody's paying that right now, whether you're
it's still the list price.
Yeah, that was the list price. And as you know, the game that used to be played, I think I'm really actually pleased it's less played now, was you launch at a high list price and then discount behind closed doors to the big insurance companies and PBMs, and they would offer the benefit. But if you didn't have the benefit, you couldn't really afford it. Lilly led the change here, right? We introduced on Lilly direct consumer pricing that was the equivalent of the PBM pricing. And right now that's about $400 for the injectables and starts at $150 in the US for Foundayo or oral. So I think we've really changed that. And then we went and talked to the Trump administration. We cut a deal for Medicare access. That number is $245 for any Lilly prescription to the government, and seniors pay $50 of that, so $195 to the government. I think that's quite affordable compared to many, many other chronic drugs. And given all of the benefits here, I think it's overwhelmingly positive from a cost effectiveness perspective.
Hey, David, you build
those price points. Sorry, just let me finish. Those price points have not really made it through every corner of the health insurance system. Small employers and municipalities, as you mentioned, probably have the hardest time getting those prices pulled through the insurance apparatus. But large employers, we're going direct to ourselves with those lower price points. And finally, the MFN rules do apply. So European prices on a GDP adjusted basis are the same as the US. So I think that narrative is shifted. Now, competition will cause prices to drop. That's okay, because in this market, we also see good demand elasticity. The lower the price, the more volume we're picking up. And we want to manage that carefully, of course, and we think there's tremendous benefits to the therapies, and we want to get credit for that so our new innovations can launch and we can recoup that investment.
Are you building everything here now as far as new manufacturing? I know
yeah, pretty much. We've got $55 billion CapEx program underway, and nearly 50 of that is in the U.S. 50 out of the 55 billion. Yeah. And yeah. Okay, they tell me we got to go, but I just got to tell you that tie you're wearing is just is absolutely magnificent. Thank you. It's a summary look, Joe. It's a summary
look. It's not identical, but it is. I mean, you have just. I think you just really know what you're doing in terms of ties.
I can't see you, so I'm at a disadvantage.
Oh, you can't. Well, you're gonna have to. I'll say. I think we'll tweak something out, two-shot of us, but congrats on the tie and the quarter, David.
Thanks, guys. Good to talk to you. Take care.
Okay, we've got a huge lineup right here in Aspen still to come, including Bank of America CEO Brian Moynihan. By the way, we're going to talk about GLP-1s and the cost for big corporations on the back of that conversation with Eli Lilly. Also, Minneapolis Fed President Neil Kashkari, by the way, speaking out against the decision as a dissenter of the Fed last week. We'll talk about that. Also, the COO of Goldman Sachs and the former Fed chair, Janet Yellen, all that coming up on Squawk. We're coming right back.
Time now for today's Aflac Trivia question. What is the only U.S. state that grows coffee commercially? The answer when Squawk Box returns. answer to today's Aflac trivia question. What is the only U.S. state that grows coffee commercially? The answer, Hawaii.
You know. All right, welcome back, everybody. Crude prices still trading well below $80 a barrel. Right now, it's $75.98, so actually below 76. This comes after President Trump said a deal to reopen the Strait of Hormuz could be signed today or tomorrow. Joining us right now to talk about it is Halima Croft. She is RBC Capital Markets Global Head of Commodity Strategy. She's also a CNBC contributor. And Halima, thank you for coming in.
Thank you for having me.
All right, so let's talk about this. This really started yesterday when Scott Bessent said here on Squawk Box that a deal could come. He said either yesterday or today. Now the president is saying today or tomorrow. But this is a pretty big move, and it happened pretty rapidly. Just so much is riding on the idea that the strait's going to be reopened.
I mean, I think it's so critically important to reopen the strait. I mean, this has been a significant supply disruption. It's been a priority of the administration to get the strait open. So we're clearly watching whether we get a extension of the MOU, or are we on the path to a permanent resolution that will lead to the reopening of the strait. So I think the details will be critically important, but this really started last week as well when we had the announcements by the president that we were getting closer to a deal.
The deal itself, we don't know what it looks like. There is an Axios report that suggests that this would be a 60-day interim reopening, with traffic going into the strait coming through the top route, right along Iran's coast, and traffic going out.
So the Iranian route, out the Omani route.
What benefit? Like, why is that something that would make the Iranians happy? What is their plan, and is the key here the temporary part of that?
I think that the question is, if we get this deal, and then if we get to the 60 days, does it end with Iran charging some type of service fee? Does Iran have the right to say, we have a say in which ships, go out the Omani route? So I think it's going to be the question of, like, for Iran, is this more important than having a nuclear program? Like, having operational rights over Hormuz, is that their way of reestablishing deterrence in the region?
Meaning that they would give up their nuclear program. That's our plan and our hope with this?
Well, I think that's our hope, that we can get to some type of deal on the nuclear program. I mean, President Trump has said that the key variable is that they say they don't want a nuclear weapon. And I think that is something that they've said consistently, but then people in the region will say, what does that mean for centrifuges? What does it mean for the stockpile of highly enriched uranium?
The oil prices have been dictating everything in the markets, because yesterday, as oil prices moved, futures skyrocketed. You saw Treasury yields come down pretty significantly too. How do we try and figure out or game where oil is headed next? Is this where we're trading right now based on the assumption that the Strait of Hormuz will be open soon?
I think it's trading on the assumption that we're getting to a starter engines phase. Now, I think that you can have a situation where you can get some type of interim deal, but then it's the question of, like, how do you normalize shipping traffic? If you are a tier 1 Western shipper, if you are, a Japanese shipper, are you on the sidelines for a while you wait to see the durability of the deal? We had the MOU in June. Then the Iranians started raising issues about where's our frozen accounts, where's our sanctions relief, and they started firing on ships again. So I think there's a certain segment of the shipping market that's going to wait to see how long this lasts.
This is interesting in the journal today, and I don't know if I had thought about it or just maybe assume that maybe they could overplay their hand, and obviously the person they're quoting here is against the Iranian regime, but says at this point this maximalism to try to use the strait as the end-all be-all in everything they're doing is going to isolate them with all their neighbors, and sooner or later, I don't know whether it's as potent a tool. It could either
does it have diminishing returns?
Exactly, and it could cause so much antagonism that eventually Trump is actually. If we did have, you don't think we have missiles, but I still think. I mean, we send bombers then. It's higher risk, but we could ramp this up again, and sooner or later they're going to overplay their hand. And they're still blockaded, right? Anyone have water?
I think this is a really important issue that you raised, because do the Iranians basically, is there a faction of their Revolutionary Guard that basically says, no, we're going to continue to escalate? And then what does that do to the White House? Because I do think there is a segment in Washington and in the region that's more in the finish the job camp. So does President Trump's calculations change? But also look at the fact that a number of countries are saying, we need to de-risk Hormuz. Like we need to
Right.
build alternative
Do
pipelines.
something else. I mean,
The question is, have we seen peak Hormuz? Are countries racing now to establish alternative infrastructure, alternative ways of bypassing this waterway?
I think that needs to be a Halima Croft, like Valerian, made a living on the new normal. I think that peak Hormuz is something you ought to trade with.
Thank you.
Has anyone ever said that?
I think
Peak
I've heard
Hormuz?
it before.
You have?
I don't know if I can claim credit for it, but it's a good one.
I thought you made that up. Okay.
Well, I think maybe Brian Sullivan even said it.
I don't want to give him credit. No, it's
Give
no,
credit
it's no. It's
When he
Halima.
asked the question, have
Peak
you
Hormuz.
seen peak Hormuz?
Yeah, he did.
Yes.
Stole it.
He stole it.
You stole it. No. All right. Well, I like it, and I hope we have. That's my fervent.
I mean, that's a way we can come out of this better.
Right.
Good, it's a part. Damn suckers. I'm dreaming of a white Christmas. What am I doing today? May your Yuletime carols be bright. I don't think no lower than that today. 772. 771.68.
Welcome back to the Squawk Box. We are live this morning at the Aspen Economic Group Strategy Group meeting in Aspen, Colorado. Joining us right now is Bank of America CEO Brian Moynihan. We've been talking for the past day with leaders about what's happening in the economy. I mentioned earlier Shahi, that Scott Besson was on our broadcast, has been talking about the economy no longer as a K-shaped economy, but a C-shaped economy. You actually have the data.
You're an idiot, Ferguson. You're just a frickin' idiot.
Why we just got the final sort of payments report. Consumers at Bank of America put 5% more in the economy, and what you've been seeing in June and July is that the third high income, medium income, low income, the lower income people's wages are growing a little faster.
That's great,
and they're spending a little bit more, and so you're starting to see more convergence in the spending patterns.
Convergence.
If you look at
divergence or convergence. Off to a good day.
Washboardjim on the market floor.
Let's have a good day. I see support on the SPY at 770, alert set at 771.68 off an inverse head and shoulders. And we're at resistance right now. So either we break it, and that is 774.83. Support to hold 77.114, and then we got two levels we got to reach, maybe three support levels. So I'll probably do the Fibonacci. I don't know. We'll see what happens when I get back. Let's have a good day.
In September, October, December meeting this year. That's a little bit more than the thing, and they're a smart research team. They think this through, but they really are saying that the labor market's in very good condition. And so you have to work on the inflation side and make sure that it keeps going down. If it goes down better than, like last month, it went down a little better than people thought, I'm sure that they would change that. But right now they think that 3 gets the Fed in a place that they can have the inflation get tamed. What's important though is the travel across the last 12 months of the view of the second half of this year. So Liberation Day, last year, second quarter, instantaneously people took 100 basis points out. As you move through, they raised it back by more than 100 basis points. Then it came back down, and now they're sitting at 2.4 for the year and 2.5 for the second half. So they're accelerating in, they're accelerating, and so raising rates and accelerating the economy to help the inflation is actually a rational economic strategy because the economy can grow through the higher rate structure.
Becky's got a question for you back in New York. Becky?
And you idiots wanted to raise the rates.
It's good to see you. If that's the case, if we actually do raise rates 3 times to try and get inflation back down, like you suspect, by the middle part of next year,
no.
What impact do you think that would have on lending?
Oh. Lord, I don't know what to do with these people. I really don't. I've tried to educate them. They think raising rates will help inflation. It'll just cause recession. We're up too high already.
Rate moves won't have a big move in that area of the curve. So it should continue because, frankly, what we're hearing here, what you hear from your colleagues you bring on the show all the time, is the returns on building a data center are so high that'll be fine. When you get further down the build out, this may be a more
Stop
interesting
thinking of the 1%.
than you have not. But I think right now they're building through it because the economics still support it. Their usage is going up dramatically, and they've got to get these things built.
Hey Brian, thanks Andrew. The 3 rate hikes. So that's what you think is going to happen. That's not in any way something that you think is a pro. You're not making value judgment. I guess your team isn't either. So you have a team that just looks at the facts on the ground. That's what. How about your team that's looking at stock prices? I think we're almost at 7,800, and I think Bank of America is like the lowest on the street, 7,100 at this point for the S&P. Do you get involved with that, or you have other people that handle that, and they can do what they're going to do, and you're not going to say, hey, what's happening here, or the market's moving out from under us.
So our research team is one of the best in the world.
No, they're not.
$500 billion a year of
my research
power.
team
I
is.
let them make those decisions, Joe, because between Chris Heisey, who you often talk to, or Savita, you often talk to, they've got a view of that. Look, these things catch up to each other. When you've seen the movement up to levels now, they'll probably adjust. But importantly, think about the year, Joe.
We've seen that a lot. They keep, the market runs away from them, and then they raise their target. But that doesn't really help investors very much.
Yeah, so I think when you think about what's been interesting as they talk about the market in the last several months is the rounding out, that the dominance of a few companies has become wider, yet those companies continue to go. So I think we'll see what happens here, but it's all going to be about earnings, Joe, and you saw the second quarter earnings almost across the board in our industry, very strong. Right. Our earnings were up 30%. Hey. You look at other people, and that's going to drive this.
We could be back at 6. We could be back at 6. Tom Lee said that before the end. Another strategist said before the end of the year we're going to visit the 6s again. So you never know. We could end at 8,000 and hit 6,900 on the way there with all the time we have left. I'm not saying that.
In my next life, I'm going to come back as a analyst that gets to predict the market because you get to change it. I don't get to change what we do at the company.
You don't get to do that. I know it's a luxury belief. I know that's the sell side. I think.
Yeah.
Let me ask you a question on the other side of that, which is situational awareness. They were a client of your firm. You had lent to them. I think we're all still trying to grapple with the aftermath of that. What happened? Has anything changed in terms of your lending standards to hedge funds and other firms in the aftermath of this?
So two things. One, I think things changed as people saw this move, and there's a natural adjustment period. I think anytime one of these happens, and we're fine, et cetera, you always look and say, okay, what happened? Should we learn from it? Should it change? And so the tendency is to tighten the underwriting standards just a hair, to adjust, especially with big run-ups in stocks. So we'll see what happens next. But these are all warning shots of, as Joe was talking about, as valuations get out, leverage in the system gets there, you have to be careful. And we run a great shop, and so, that worked.
Had Ken Griffin not come in, though,
yeah,
I mean, how damaging would have that been?
I think we'd have been fine. Based on the standards that we lined on, and but the reality is that you have to go learn from every lesson of the past, and so the natural instinct of everybody that participates is, wait a second, let's go back and look, and that has a tendency to push down a little bit.
Before we go, we were having a conversation at the end of that fascinating interview that Becky and Joe were doing with Dave Ricks at Eli Lilly about GLP-1s, and you were telling me about how much Bank of America is spending on GLP-1s now for its employees, and how you're thinking about that.
Yeah, so if you think about our company, we're self-insured. We spend $2 billion plus on healthcare a year. We spend about $250 million or more on GLPs, and that's up from zero. Think about it, 4 or 5 years ago.
$250 million you spend.
Yeah, because it's self-insured. So it's when a teammate pays the quote premium or the copay, that helps. But everything else we pay for. What we see in it is we see a great impact on the employees. We've always been about mental wellness, physical wellness. We've had a lot of programs. We have a STEPS campaign. 40, 50,000 people are doing as we speak. So we build these programs. What's interesting is, as you talk to this, and I've been on a group of CEOs with the American Heart Association and Davis, others on them, and as they watch this drug progress, how it impacts is really interesting because it's lowering near-term incidence of heart issues for people to take it, even if they don't have all the attributes. That's the payback. And so our belief is, believe me, we're pounding everybody on price and trying to get as cheap, and the pills make it more available. But our view is that the long-term health benefits, plus there may be more short-term health benefits, and that's what we're trying to
sell. So here's the thing, so your company's doing that. There's a whole number of towns, you probably read it about these towns that are spending extraordinary amounts of money, firefighters, police, and it's bankrupting the towns because they're not seeing on the other side. I mean, it's really a long-term bet on the health of your employee base and how you have to think about that.
That's an interesting question. It clearly is. If we have somebody 40 taking this and their life improves at 70, they may not be working for a company. Matter of fact, they may not be working for a company in 5 years because they take a job somewhere else. So you just have to say it's the right thing to do for your teammates so they can get access to these benefits. And we have gates, and they have to qualify and be prescribed and all that stuff. But the interesting question that's arriving is, does it help other types of things? And the docs talk about it, I just listen. And that's a kind of an interesting question because it does help other types of things. The payback's nearer. Now, here's the problem with cities and towns is that we have about $3 billion in monthly salaries and wages and about $200 million, make it easy, in monthly health care benefits. If our teammates are happy, that's more important. If I'm in the city and town, it's a little different dynamic. So we can afford this. We do it because we want to be the great place to work. But it's been fascinating to watch our teammates' behavior on these adjustments, the loss of weight. We monitor that. We give them coaches and everything. And so it's a good investment by us.
Brian Moynihan, always appreciate you and appreciate seeing you. Thank you for waking up early here in Aspen. Thanks.
Sun's coming up.
The sun is coming up. Becky?
I love that explanation. We're going to have to talk a lot more about that. But yes, that's a good explanation of what's happening with GLP-1s, private sector and public sector. Okay, let's talk about Booking Holdings. They're out with better than expected second quarter earnings and revenue. The company said travel demand remains resilient despite geopolitical uncertainty, and that stock this morning is up by 8.5%. Joining us right now to talk more about it is Booking Holdings CEO Glenn Fogel, who is also a CNBC CEO Council member. And Glenn, it's great to see you this morning.
Good morning, Becky. Thanks for having me.
So what happened? I know earnings were better than anticipated, revenue side too. But this jump of 8.5% sounds like people are rethinking some of the concerns about AI along the way too.
That may be it. It may also be an understanding that potentially there's peace in the Middle East. We'll see what happens. And then, of course, that'd be great things in terms of the cost of oil, which turns into jet fuel, which turns into lower prices to travel. That could be a possibility too. Overall, we try not to look too much at the short term. We are long term, and we are in favor of how much more travel there's going to be. Our job, get more share of it.
You did warn that the conflict in the Middle East obviously pressured travel to that region, but that's the one kind of gloomy part in an otherwise very bright outlook that you've seen overall. Why don't you talk first about where travel is the strongest and who's traveling?
Yeah, so it's interesting, and one of the things that a lot of people don't understand about our business is how global we are. So our U.S. bookers are only a low double-digit number of our customers. So we really being global, when they're impacted like in the Middle East, that's really impacting not only our percentage of people in the Middle East, but people in Europe who are trying to go to Asia through Dubai or Doha, Abu Dhabi. So those things are really important to understand. So for us, look, we're very hopeful that there's going to be peace in the Middle East, and that would greatly improve global travel. So be in favor of that. But look how resilient we've been, even with these problems in the Middle East. Now, there was some normalization in June, so it was better than it was earlier in the war. But again, nobody knows what's going to happen tomorrow. We all don't. But what I think about is the long term. At some point, there will be peace. At some point, things will go back the way they were, and that'll be all good for us.
What has it meant to this point, the disruption in the Middle East, the war in the Middle East, in terms of trying to reroute passengers from Europe and beyond? How do you do it?
Well, you try and reroute, but some stuff just doesn't happen. So, for example, there's a lot of travel from Europe to Asia and Asia to Europe that goes through the Middle East. Well, a lot of the long-haul carriers, they pulled their lift, meaning they used to go from, let's say, Paris to Dubai and then to Bangkok. Well, they said, we're not going to fly that now. We'll still fly the nonstops, but that's a lot less lift. That means there aren't as many tickets. That means the prices are higher. That means there's less business. But what it does mean then, people say, well, I can't afford, I'm not going to make that long haul. They'll do it domestically. So that person in Paris will take a trip maybe to the south of France instead of going off to Bangkok. We get that business too. Unfortunately, though, it may be fewer nights, it may be less money, it may be less for our revenue. That's what's happening. Higher domestic business. When I say domestic, I mean within a country, not necessarily within just the U.S. U.S. is throughout the world. Less long haul international.
Where are the strongest places of growth at this point regionally?
Well, the U.S. is the strongest, and we've been talking about this for some time, how resilient the U.S. just keeps on giving. It's wonderful. And our numbers up a high single digit in the U.S. That was our strongest region. Very happy about that. But again, it shows we're doing this well with the U.S. as the locomotive right now going well. When we get those other parts of the region, Europe, Asia, rest of the world, that's going to be just wonderful for our entire business.
Do you still see a K-shaped economy?
Well, again, what part of the world are we talking about, right? So I just heard Brian talking with Andrew there, and it's very interesting because everybody's talking U.S. mostly, but again, us being very international, we're looking around the world. Some parts are better than others. Europe's certainly slower than the U.S., and certainly there is, maybe it's an extreme K in Europe. I haven't looked at it too closely, but certainly there are large parts of the world that are not doing as well as the U.S. U.S. being driven by AI stuff, it's not happening yet in the rest of the world to the same extent. And that's something that, again, that's something I see, that's something in the future we'll be able to benefit from when the rest of the world picks up.
Is it only AI? Glenn, I'm starting to think it's more than just AI. I mean, we should be the greatest. We're always the greatest economy in the world, obviously. But I mean, I can't ignore the stock market. I can't. I know it's AI, but you're seeing it whether it's helping non-AI companies, the AI component of those companies, or there's something else going on. Things are expensing or deregulation. How about deregulation? How about that we drill baby drilled, and even though we're involved in a war, we're well supplied here. I just don't see why. I don't see why the negativity of are you better off now than you were? I think we just had, who was it, Brian, say the affordability issue is if people tell you there's an affordability issue, you start believing it?
Right. Well, Joe, you and I could sit down sometime over a beer and we could talk about problems of the rest of the world in terms of how regulations are inhibiting growth and people complaining the economy isn't doing well, but they're not looking why. And you and I could talk about that. I do a lot of work around the world, in Europe in particular. We have had some issues that have prevented us from growing as fast as we should be able to grow. Unfortunately, the world is what the world is, and the regulations are what they are now. Supposedly, there's going to be some effort to try and deregulation, and if that does happen, then other parts of the world, economies that are being slowed by too much regulation, will improve. Hopefully, that will happen. That's my hope.
But it's already happened here. That's my only point. I don't know. I think we have a lot to be optimistic about, but no one seems to be very optimistic right now, except the stock market.
Glenn sounds pretty optimistic.
Glenn's optimistic.
And so's the stock. The shareholders this morning. The stock's up by about
It's a $150 billion company. Glenn, when did that happen?
Slowly and then all at once. I've been here 27 years now. I've been CEO. It's my 10th year. And I am very pleased through all the things we've gone from all the way back to 9/11, dot-com implosion, the worldwide crisis, the general financial crisis. And then we had even things like volcanoes in Iceland and the pandemic, worst thing ever to travel. And then we had the war in Russia, Ukraine. We were the biggest player in Russia, and that went away. And then you have Hamas, Israel, and then we have again, it's one thing after another. It's like the title of that movie that won Best Picture, one battle after another. But through it all, 27 years, we've grown from a stock that we just did a split, but you work with the pre-split, it's easy to work with it. That was a $6 a share stock, and we got up in last summer at almost 6,000, almost 1,000 times. It's easy math. It's been good.
Wow.
That was all.
Glenn, you have seen some stuff.
It's all shot.
I have.
Well, thank you very much for joining us this morning, Glenn, and we hope to see you again soon.
Thank you, Becky.
Okay, take care. Folks, it is 8:02 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and the U.S. equity futures this morning at this hour are mostly higher. You're looking at the Dow futures up by about 220 points. S&P futures up by just over 18. The NASDAQ is lower. It's down by about 30 points right now. Energy prices, we've been watching very closely. They've climbed ever so slightly this morning, up right now by about 35 cents for WTI to 76.08. Andrew?
Thanks, Becky. We are live at the annual Aspen Economic Strategy Group meeting, and with us is Minneapolis Fed President Neil Kashkari. He was one of the dissenters last week. Let's talk about rates, rate hikes, and your decision to dissent.
Well, thanks for having me, Andrew. It's great to be here. Inflation's been high now for 5+ years. Energy prices remain high. I think the outlook for the Strait of Hormuz is uncertain. I certainly don't trust the Iranians. And so at some point, the Fed's job is to get inflation back down to our 2% target. Corporate earnings are through the roof. They're doing great. The consumer is hanging in there. The labor market is hanging in there. I look at these constellations and I say, what evidence do I have that monetary policy is particularly restrictive right now? And so I argued now is the time to start slowly moving up as we get more data in.
There were some other dissenters with you. You've dissented before.
I have.
By the way, this was really, though, the first time with Kevin Warsh now in the seat. I'm curious just what your thought was about that, because there is a view that, sometimes a new chair comes in, may have a particular view. Sometimes there might be like a honeymoon period. It doesn't seem like you were giving him the honeymoon period.
Well, he said publicly many times that he likes a good family fight. He said that publicly. He said that internally. And I'll just say he said to me, do what you think is the right thing to do for the economy. And I said, I really appreciate that.
So tell me how it happens, because at least historically, the Fed chair has called around before a meeting and said, what are you going to do? What's your plan? And I assume has tried to either talk you into or out of wherever.
That's not exactly how those calls go. So usually those calls go, and Kevin, and we appreciate it, Chairman Warsh has continued the tradition of reaching out to everybody in advance. We have a discussion about how I'm seeing the economy, how he's seeing the economy. We talk about, we might see things similarly or differently. And then I say, hey, here's where I'm likely coming out in terms of my policy recommendation. In this case, I was undecided. I wanted to go into the meeting and hear all the arguments on both sides and I ultimately decided that raising rates was the right thing to do. I wasn't pounding the table that we needed to raise now, and if we waited till September, that would be too late. But my conclusion, based on everything I listened to, was that it's better to get going.
Okay, is your expectation that in September, given what you know about the other members and where we are, that we will have a rate hike?
I'm not going to speculate on what the committee might do. We have a lot of data that we're going to get in. We're going to have 2 more inflation prints between now and September. A lot of news potentially to come from the Middle East. Data centers, I mean, everything else we're going to look at before we decide.
But just to go back on this a little bit, we reached out to Brian Moynihan. His team thinks there could be 3 rate hikes by the end of the year. What is the Neil Kashkari view of the world?
Well, that's not impossible in my view. I mean, if inflation continues to move sideways or even get worse from here, then I think we're going to have to start gradually adjusting interest rates to bring things back down. The conundrum that we're facing is traditional economic analysis says if there's a one-time supply shock, monetary policy should just let that flow through the economy, don't necessarily react to it. But now we've had a series of successive supply shocks over 4 or 5 years. Inflation has been frustratingly persistent. It's our job to get inflation back down.
I think Joe's got a question back in New York. Joe?
Yeah, it struck me, Neil, it's good to see you. And I was listening, and you described this great economy and what was going on. And then you said, I don't see any signs that we're being restrictive enough to start hurting this great economy. And just the incongruity of that, I understand where it comes from because it's a blunt tool that the Fed deals with. So you absolutely assume that the reason inflation is too high and gets too hot is because the economy is running too hot. Think of the perfect world we'd have if that wasn't the case. If inflation could be 2% at target and we could be running like this with the economy. Are you sure it's the strength of the economy that is causing inflation to be above the 2% for the past 5 years? Because maybe it's not grounded in that, and maybe it's not embedded because of that. Wouldn't it be a great world if you didn't say, wow, things are great? I don't think there's no signs we're restrictive. We got to get restrictive to slow this economy down.
Well, obviously, Joe, you know that my goal is not to slow the economy down. The goal is to get inflation back down to our 2% target. And as you said, we have one tool. Now, I don't think most of the inflation that we've experienced is because of economic growth and robust demand. I think most of the inflation has been because of these successive supply shocks. There is a demand element on top of it as well. And nonetheless, it's the Fed's job to get inflation back down to our 2% target. I went back to the transcripts from the 1970s. In the 1970s, the Burns Fed also diagnosed the high inflation as a series of successive supply shocks. I don't think now, this is not the 1970s. The economy is way better than it was in the 1970s on many dimensions. But I don't think anybody would look back and say, boy, the Burns Fed was right to just look through all those supply shocks and let inflation continue to run hot.
Right. Could shrinking the balance sheet do it? I mean, is there any other way to do it other than putting the brakes on the economy?
Well, now the debate about the balance sheet is going to be an interesting one. Some people view that the federal funds rate and the balance sheet can be interchangeable tools, both effectively affecting the stance of monetary policy. So if you believe that, then even if we were to shrink the balance sheet, that would also be tapping the brakes on the economy. And so our primary policy tool is the federal funds rate, and we need to focus on our primary policy tool. I'm not calling for a dramatic increase in interest rates. I'm simply saying I don't see evidence that monetary policy is marginally restrictive right now, and I think we have more work to do to get inflation back down. And I would rather get going now in small steps than wait till later than we have a really entrenched inflation problem and have to raise rates aggressively then.
Let me ask you a different question about maybe another tool, which is communication, or maybe lack of communication. In the aftermath of the financial crisis, which you were intimately involved in, the Fed took on a new posture under Ben Bernanke, which was to be much more communicative. Sometimes that communication worked. I believe that Kevin Warsh would argue today that it didn't work and needs to be rolled back a bit. He said that during the press conference. There's been reports now about not only that, about sort of rolling back how much is spoken about, but even how many meetings are had in a given year. Currently 8. There's been chatter about whether that could turn into 6. What's your position on how the Fed should or should not communicate, and how many meetings, for example, you should have a year?
Well, it's a very complicated topic, and I'm going to start by parroting the chairman, who says there's a task force for that, so I don't want to prejudge. He has some folks looking at this, and they're going to give us some recommendations. Ultimately, the committee has to decide what is the right communications posture. I personally think that communicating what we call our reaction function, so not necessarily making predictions about what we think will happen, but saying, hey, there are some number of different scenarios. If these economic events happen, this is how one would expect inflation and monetary policy to respond. I think that is good for market participants to understand that. Then they can make their own judgments about what the future holds and then what the likely path.
But is that more information or less information?
It's not more than now. It's continue. I think there's value in continuing the tradition of explaining our reaction function to the public and then letting the public figure it out from there.
And then just hypothetically, would you prefer 8 meetings a year, 6? You get out of an extra 2 meetings if you go that route.
I don't think there's any magic number about 8 or 10 or 6. You know, we always have the ability to call emergency meetings if things happen. But that's a big event. When the FOMC calls an emergency meeting, it really sends a signal that we're concerned about something. And so, you know, I think I'm open-minded. I don't have a strong view.
Neil Kashkari, thank you for coming in this morning. Appreciate it. It's
Thanks
great
for
to see
having
you. Thank you. Joe?
Thanks, Andrew. Coming up, ADP private payrolls, just moments away. Squawk Box coming right back. Well, it's out, Steve. What you got the numbers? ADP.
Yeah. Good morning, Joe. A miss by ADP, coming in at 44,000 compared to an estimate of 75,000. That was the estimate that was out there, and down from the prior month of 95,000. It was revised down from 98 to 95,000. Goods sector minus 3,000, so that was something that hurt the top line there. Service sector kind of lackluster at 47, and there's the non-farm payroll estimate for Friday at 83,000. That includes both government and the private sector. So not a huge miss considering the variance between ADP and BLS, but something worth noting. Small business 23,000, medium sizes or business companies with 50 to 49, 50 workers 8,000, and then large businesses 13,000. So kind of muted across the board there. And then the sectors are what we've seen: education, health services up 36,000, financial services though up 10,000, construction lackluster, trade, transportation, utilities down 8,000, and leisure and hospitality, which had of course been one of the leaders, down 11,000. Maybe we're seeing some of the reversal of the World Cup hiring that's out there, but decent wage numbers. This job stayers 4.4%. That's unchanged, but job changers. That's some of the best number. That's one of the best numbers we've seen since 2025, up 7%. If you change your job, but 4.4% or unchanged if you don't. Now I'm looking at, guys, the difference between ADP and BLS, private sector. 805,000 jobs created this year according to ADP, 721,000 according to the BLS. They're close in there, but not on a monthly basis. So nobody really takes it that way. Over time, though, still a low hire economy, Joe.
Yeah, I'm wondering, I've just checked Drudge to see if the headline's going to be jobs numbers disappoint greatly, just how they're going to play this. They have been pretty good the last couple of months on the unemployment Friday. I'm looking at Drudge. I just realized, see how Drudge is characterizing the stock market rally. Dalio, AI bubble reaching Great Depression territory. So I know you might have thought yesterday was a good day, but in fact, it was indicating something akin to the Great Depression. Just to keep you honest, Steve.
I don't think that's happening. I've seen some very interesting reports. Look at Caterpillar. They're saying things are not slowing
down. Great Depression, crash.
Yeah, but all that, Joe, links in with your conversation with Kashkari that I thought was fascinating, the one that Andrew just brought us.
Yeah.
I don't think he's saying he wants to slow the economy down.
No, I know. I know. That's all they got, Steve. I understand. It's been 5 years. The Fed. It's all they got to use to try to get it to 2%. Right. Neil voted for some cuts in the last during that 5-year period. He voted for some cuts when we were way above. So.
Well, there's an idea out there, Joe, of the Fed taking back some of the rate cuts of last year that were done in response to the weakness in the job market. Some people I talked to yesterday suggested that would have been something that Warsh might have told us in terms of, well, why would we do this? Well, we were worried about the job market. We cut rates. I think what they need to do, Joe, and you're right, there's just the one rate, and there seems like there's two very distinct economies. There's this crazy investment going on in AI, and then there's kind of everyone else. But what the Fed needs to do is to tune the funds rate to what's really happening in the economy. And there seems to be a tremendous demand for capital from the government, from private sector. And that seems to be something that's put upward pressure on rates.
It's the age-old question. If that's your only tool, the thing we all want is a rip-roaring economy. That's the thing we all want. We'd like to grow a 10% GDP if we could. If your money wasn't worth half as much every 5 years, it would be great. But that's the problem, and we've seen it in South America and other places. Inflation is the worst thing that can happen. But in a perfect world, you'd like 2% inflation and 10% GDP growth. Maybe AI will give us some semblance of that.
Not if the 10% GDP growth leads to minus 10% down the road. I'd prefer to stay steady at 3%.
I know. I want it not to do that. I want it 10 again and again and again, and low inflation from.
Right.
How
maybe that'll happen when the bots run it, Joe. When humans run it, and you get these things that are called Minsky moments, where the seeds of the demise are sowed by the boom that's happening now.
Right.
That's when you get humans involved. We screw things up all the time.
And then that place gets raided. Remember the night they raided, and then everybody gets arrested. Anyway, thanks, Steve.
Nice talking to you, Joe.
All right.
Up next, we will talk about the banking sector, the Clarity Act, and Kevin Warsh's Fed with the Chief Operating Officer of Goldman Sachs, John Waldron. And then former Fed Chair and Treasury Secretary Janet Yellen will join us. Squawk Box will be right back.
Welcome back to Squawk Box. We are live in Aspen, Colorado at the Aspen Economic Group Strategy meeting. Goldman Sachs' president and COO, John Waldron, is here with us. We got a whole bunch of things to talk about with you, but we talked to a number of leaders. I'm curious just about the market right now, because the market seems to still be on fire in a good way, meaning it's higher than ever. You guys just came off the SpaceX IPO. I'm curious sort of how you're seeing CEO confidence in this moment. We got the situation of the Strait. I don't know if you think we have a deal or we don't have a deal. What's the pulse?
Well, it's nice to see you, Andrew.
Nice
Thanks
to
for
see you.
having me. It's nice to be in this beautiful setting. I would say the most important factor right now is earnings growth. You know, earnings growth continues to be really strong. We're going to have, the second quarter was the 7th consecutive quarter in the S&P of double-digit earnings growth. So we've had very consistent and significant earnings growth, which is propelling markets. That's ultimately the most important fundamental driver. And I would say recently it's broadening. So obviously there's been a lot of focus on AI, and there should be. That's I think 50% of the earnings growth is coming from AI infrastructure, so that's significant. But if you took the median stock, earnings growth in the second quarter was 12%.
Right.
So that's pretty healthy, and that shows a little bit more of a breadth of market. So that's really fundamentally driving, I think, the market performance. Obviously, there's lots of geopolitics and other factors that are intruding in that generally good underlying story, and so you get little fits and starts. But generally speaking, I think earnings growth is part of the market.
By the way, on those the fits and starts of geopolitics, do you have a house view of where oil is ultimately going to be over the next couple of months? I mean, if this deal is, you know, the 60 days is real. We've seen 60 days before. Hasn't turned out that way. I don't know where you land.
Well, if you look at our macro forecast for oil, it's in the 70s, you know, for oil. So that's generally speaking a pretty, you know, kind of static position from where we are today. Obviously, if we don't get resolution in the Strait, you get more pressure on oil prices, as we've seen. All else being equal, we think oil kind of lives around where it is right now.
Big topic here is AI, obviously. Topic here, I think, is AI and jobs. But I would ask you it in a different context, which is the balance sheet of these firms, the balance sheet supported by a lot of your balance sheet and everybody else's balance sheets, and the expectation of IPOs, whether it's Anthropic or OpenAI coming down the line, how you think about the reaction, for example, to the SpaceX IPO, and what's happening just to the ecosystem as we think about open weight models and that whether that breaks other parts of the frontier lab models and everybody else.
All right, so there's a lot
to unpack
in there. I would start by highlighting the depth of the markets and their ability to finance this infrastructure boom. We've seen about $1 trillion of financing year to date in what you would characterize as AI infrastructure, public markets and private markets. We see tremendous depth when we're raising capital for those companies. Obviously, those companies are starting to use heavy amounts of their own free cash flow, in some cases willingness to go to negative free cash flow positions to finance the infrastructure. And I think you're hearing from the likes of Andy Jassy and the folks at Alphabet and others significant confidence in the demand function. Enterprises like Goldman Sachs are using tokens significantly. The run rate spend on tokens is high. I think that continues for quite a while as we all try to sort out how to create the productivity and efficiency.
Are you worried about token maxing, as they say? I mean, do you say to yourself, we got to figure out a way to make this cost less?
Of course, everybody's worried about trying to figure out how to create ROI on the spend. But right now, at this part of the cycle, I think most of us are still trying to sort out what are the use cases? How do we create the productivity gains? How do we build tools for our clients or customers if you've got a consumer-facing business? So there's a lot of exploration going on right now. So I think token maxing is going to become a bigger concern. I think your question on open weight models is a very good question. We're spending a lot of time at Goldman Sachs focusing on open weight models and how to think about open weight models. I was in China a few weeks ago and visited a bunch of companies where you can see the value of the open weight model in that economy. So I think that's a question that's going to be a significant question for many of us to face, kind of now and into the future.
And we saw Google come out with its earnings, and the market didn't react. They didn't like the sort of amount that they were spending in terms of CapEx. And that was sort of the first break I think we've seen where the market's saying, I don't know, does this all pencil out? Do you see that impacting the IPO market as you think about, or even watching the reaction of the SpaceX IPO?
Well, I think we're in one of those fits as opposed to starts when you look at some of the earnings that have come out. But post the earnings, the stocks have traded well.
Right.
Now you see a little bit more confidence and conviction. Some of the geopolitics helps. Look at the cloud. The cloud performance is extraordinary. That's a positive impetus for the marketplace. If you look at the growth in cloud revenue, everybody gets focused on token spend, but look at what's powering a lot of the economics in that value chain for the likes of Google, Azure, AWS, et cetera. The cloud numbers are, I think, very supportive of a bunch of these valuations.
How should we think about the SpaceX IPO? I mean, you guys led that IPO, and the stock is down since then, and there's big questions about what's going to happen to the stock when more investors who were originally in it can actually sell.
I think it was a very successful IPO. I think it's an extraordinary company. I think finding price discovery in a company of that magnitude at that kind of size and scale is always a challenge for the marketplace. We're going through that period right now. There's obviously earnings were good.
Right.
There's obviously lots of stock that comes off lockup that has to be adjudicated. So we'll see how that plays forward. But I think generally speaking, I think you have to look back and say that was a very successful IPO.
Situational awareness, which was the other big topic last week. We're trying to figure out if there's knock-on effects. You were in the center of it. You were one of the lenders to that firm.
We were. Yeah, I think it's a good example of heavy risk appetite. Getting maybe a little bit too far. It's a good lesson for all of us. I think it's a bit of a wake-up call for all of us.
So what's changed in the last week for you guys?
Well, I think that everybody's kind of focused on their risk positioning. Markets have run very far. You do have lots of euphoria over AI, and certain investment paradigms are being tested, and so we all have to look at our risk positions and make sure that we're comfortable with where we are. And I think I feel good about how Goldman Sachs handled that situation.
Where do you think we are by the end of the year, equity markets?
I think up.
Up.
Yeah, I think up. I think earnings will continue to be strong. I think that's fundamentally what we should be focused on.
I like that answer. John, thank you for joining us this morning.
Thanks for having me.
Appreciate it. Thanks. Becky?
Andrew, thank you. We want to get over to Megan Casella. She's got some Treasury refunding news. Megan, good morning.
Becky, good morning. That's right. Treasury announcing this morning its refunding plans for the coming quarter, and it is once again holding auction sizes steady. Treasury planning to auction off $125 billion in securities. That matches expectations, and it holds exactly in line with the past several quarters. So no surprises for the Treasury market here. Now, Treasury also says that it believes its auction sizes leave it well positioned to address any changes to the fiscal outlook. And this is the key for the bond market here, they once again say that they anticipate keeping auction sizes steady for at least the next several quarters. That's the stability that the market is looking for in this release, and it was there once again. Now, a few more of the numbers. Treasury says it'll be refunding about $96 billion, raising $29 billion in new cash. The breakdown in tenors also holds the same as before. So that's $58 billion auction for the 3-year, $42 billion for the 10-year, $25 billion for the 30-year. So guys, even after borrowing estimates on Monday came in slightly higher for the quarter than had been expected, this today is welcome news for the market. Guys.
Okay, Megan, thank you.
All right, coming up next, the Dow and S&P hitting record highs. Sylvia Jablonski of Defiance ETFs joins us on what investors can expect next in her view. Right now, here's the AccuWeather forecast with meteorologist Bernie Rayno.
It's more humid on Wednesday across the Northeast. AccuWeather says dry in Boston, spotty shower, New York City late today, then a thunderstorm tonight. We'll have some travel delays, Philadelphia, Washington, D.C. Thunderstorms, Atlanta down toward the Florida Peninsula. Stays hot, Texas in the southwest. Dry weather continues, not to help firefighters battling those blazes in the northwest. Delays in Atlanta, perhaps New York City tonight. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
Why I'm late. Get to the market. Sylvia Jablonski, Defiance ETFs Chief Investment Officer, joins us. Sylvia, I commend you because I don't think you've just been wringing your hands about the levels of the market like so many of your competitors. It still must be a little bit surprising to you, I guess in a pleasant way, just how quickly this is happening in terms of the averages moving higher.
Yeah, good morning, Joe. That's right. We've seen the Nasdaq now have its best 4 days since 2021. Basically, S&P is back to all-time highs here. And really, what I think is happening, this is what we talked about last time, is the market was pulling back around geopolitics and uncertainty and AI spend, and there was a lot of talk around it's too much spend and what will come of all of this. And I think that earnings season has really been a clearing event here, right? We've had more than 60% of the names report. 86% are beating on EPS, 47% year-over-year growth rate, which is 7 consecutive quarters of double digits here. And who's winning? It's the AI hyperscalers. So not Mag 7, not just AI, not just chips, but the AI hyperscalers. And so these are the companies that are actually spending a lot of money on AI. They're companies like Oracle, Microsoft, Amazon, Google, but they're monetizing on it, right? So we're seeing their revenue growth. We're seeing, the talk about demand outweighing the capacity that they have and having a real clear and transparent vision into what they're going to spend on and what will come of it. And so the market really liked that, and it's rewarding some of these AI hyperscalers and the tech trade again.
A couple of the individual names, it's almost like people were, all right, looking at the results. Wow, okay, the earnings are really good. The revenue growth is really incredible. Is there anything in here I can find to worry about? And they found the free cash flow, or they found how much the company was spending. So they sold it off for a day or two, but then they went back and said, wait a second, what's the underlying story, though? And that was intact to the nth degree. There were very few actual disappointments for maybe the stuff that matters most. And it's like it almost brought people back in after the market did have a test on the, when was that? Was that last week or the week before?
A week and a half ago, right?
Week and a half ago, where Ken Griffin had to step in.
Yeah, that's right. And then, you had that talk, and then you had Jassy coming out and having the best result that they've seen in 4 years, 30% growth year over year, massive cloud growth, demand there. Azure is justifying the AI story. Google is becoming an AI infrastructure story. And yes, the spend is there, but what they're also showing is that the revenues are there and the demand is there. And that's really key. And that's really what I think investors needed to digest. As you said, there was kind of this gut reaction to this spending, but then when you look under the hood and you listen to what they're saying, it's hard to say. It's hard to say that these companies are not interesting to look at when for the next year or two, you see the same story that they're talking about, like, we need to bring capacity into the market. And what does that mean? That means AI infrastructure spend, that means energy, that means cooling, photonics, lasers, all of these things that power data centers, power cloud, get data to move from point A to point B. And it still remains an investment opportunity for investors to consider.
And Ken Griffith made a fortune on that trade.
Yeah.
Yes. Great of a life.
He's not altruist. He's not philanthropist. Well, he is, but in this case, he knows. Yeah.
Not to situational awareness, but yeah.
And then I'm thinking, okay, we're waiting for AI to broaden out where everybody starts using it. I didn't know it was going to broaden out because Sherwin-Williams makes all the solvents and sealants and materials used in the data centers, and Caterpillar makes the tractors that are going to be used to break ground on all the new data centers that are. It's spreading out in a way that is even before the uses of AI, pay off. There's all these other players that you don't immediately think of that are benefiting from the build out.
Yeah, absolutely. And I think that's why, talking about looking under the hood of the AI hyperscalers, right? They're kind of the immediate beneficiaries, but then what's next? Where does the puck go? And it's just some of these places, I think you're going to have investors looking at things like AI capacitors, AI inference. You're going to look at cooling, energy. I mean, energy is actually it's probably the best sector, I guess, so far with triple-digit year-over-year growth. And a lot of that is because of the necessity to power AI, companies that provide electricity, nuclear. I think that there will be a lot of opportunities for investors. And this is actually where, I think it's why we're seeing all the flows into the thematic ETFs, particularly like AI hyperscalers, AI infrastructure. It's because investors are looking for who are these people, right? Who are these companies? And they're looking for those types of baskets. And that's kind of where the puck is going.
Right. What was Philippe buying when we were surprised by? He was buying raw land where
Yeah,
3 years ago.
way down the chain to look at.
Something else he was buying that to help the data centers and the I can't remember what it was. But, oh, no, it was like REITs or something. That I can't remember. But
I think it was land.
Yeah, and land, and raw land for where, but 3 years ago doing it, which.
And that broadening out is great for the market, by the way, right? Your last guest said that the median stock right now has 12% year-over-year growth, and that's pretty good if you look at the broad universe of stocks.
Right. Okay, thanks, Sylvia.
Thank you.
Sylvia Dublonsky, okay. Andrew.
Coming up, thanks, Joe. Coming up next in just a moment, former Fed Chair and Treasury Secretary Janet Yellen is going to join us. We're going to talk about everything that's going on. Squawk Box coming right back in just a moment. Welcome back to Squawk Box. This morning we are live from Aspen, where I've been talking to some of the top economic minds across the country, and joining us right now is one more of them, Brookings Institution Distinguished Fellow Janet Yellen. She's, of course, the former Federal Reserve Chair, served as Treasury Secretary in the Biden administration, and it's great to see you. We've talked to a number of Treasury Secretaries, folks on the Fed, FOMC, and others, so I'd love to get your perspective on well, let's just start this. Where do you see the economy right now? You want to grade the economy for us?
Well, the economy is really doing surprisingly well. It suffered a lot of shocks, and it's proven itself to be very resilient. I'm surprised in many ways that the oil shock and the war in the Middle East hasn't had more of an effect on the economy than it has. I do worry that if it continues or escalates, that we will begin to see a bigger effect. But we've had moderately good growth, maybe some signs that productivity growth is improving. The labor market, which I was quite concerned about 6 months or a year ago, seems like it's proven quite resilient and is functioning well. It doesn't look to me like it's so hot that it's the source of inflationary.
I'm Hill. I'm Hill. I'm here. I'm here. I'm here. No broadcast available? How? Oh. Well, they finally caught up to me. Jim, you've been bad-mouthing our station too long. We'll no longer broadcast or...
20 to 49 employees were down 4. What? 19 was up 27,000. That's a nice number. Everything else was small numbers.
Can we just other moments on the call, like how good it is to do business on the moon? Did you know that
They will not shut up about SpaceX. They act like the first IPO, it never goes well. There was one that I traded around $10. We run it up to $10. And then wasn't even 3 or 4 days. They came out and said that they were going to do this and they were going to do that and they were going to do this and they were going to buy that and they were going to do this. Could have been a coupon. Had something to do with food. Something to do with ordering food online. I can't remember what company it was. That thing tanked and never did recover. We'll turn on the air for a little bit. How much time? I got time. Got a lot of time. Cool this place down. Fun. I'm here. I'm here. So they had Uber on this morning. We're breaking resistance. Uber drops. They bring in a lot of money. I was surprised how much money they bring in. You might get a little cat bounce off this. We just now respecting the 20 here up to the 72.33 area on Uber. My name is Washboardjim. SpaceX might be a nice one. The video pop jump. Intel. What's going on here? Oh shit. Never can find what the heck happened here. Oh, there we go. Something occurred with Tony and Jim. Ooh, AMD. Watch AMD at open. You don't have no idea what to expect? Is it true that men can have babies, Randy? PLTR might expect, see if it holds 161.64. Tesla, we got a triple bottom, fallen wedge. Good support on CRWD. What time is it? 15:10. Now come driving in about 4:45 this morning. Someone had their truck broke into. I showed up right when the cops showed up. I had shit stole out of my car here too. One thing about where I live, lucky I ain't been shot or killed at night. Been shot at. I remember back in 1979 we had a murder. It was a serial killer. And then, about the time Obama got elected, murder rate jumped up to 57. The first couple of years he was in office, and we were going, what the frick's going on around here? We had 57 murders in 1 year. Per capita, that reaches Chicago and breaks it. Well, the crackheads are coming here, moving out of the big city. They've done wore themselves out. Burnt bridges. And then they come down here and burn our bridges. AMD. Oh, let's see what's they're pumping AMD this morning.
Using, more of their workloads from, let's call it what was experimentation, into now production workloads. People need a lot more CPU compute as well as GPU compute, and we are the leaders in CPU compute. We're very, very proud of our technology stack. We've just announced our next generation. Venice has launched, and as you know our Italian cities very well. Venice is leadership across every aspect of compute, whether you're talking about the highest performance or the most overall performance per core.
Liar.
Those are areas where we just lead. So we're excited about where the market is, because the market needs a lot more compute, and we're even more excited about just the overall positioning in the market because our product portfolio is so broad and strong.
So Lisa, as IT budgets get assembled for next year, how should people think about the enterprise state of mind? I mean, is it about sort of cost discipline and trying not to token max and being wary of our potential ROI, or is it about just breaking some stuff and hitting the pedal to the metal?
Well, Carl, it's a great question. I think it's a little bit of both. And the way I see it, spending time with a lot of CEOs and CIOs right now, the desire is to truly use AI as a tool. AI is a tool to help all of our businesses become more productive. And there is a good amount of experimentation where you're trying to figure out which is the right model that will get the best outcome from a business standpoint. But we are also in the place where the AI costs are getting so large that everybody has to manage, just like you manage your employee costs, you have to manage your AI costs. And I'm a big believer in there will be all kinds of models that are important as you go forward.
Oh, that was a low blow, honey.
Using the largest foundational models, as well as using open models and what's called smaller and medium-sized models as you think about all the different use cases. So
oh, she sounds so smart.
The enterprise today is how do I
she is probably
AI while ensuring that I'm managing it for what will be significant growth going forward.
I love you.
Lisa, you mentioned
are you married?
Models. There's certainly a bit of a debate going on around that right now. I mean, do you philosophically believe that open models are better and safer, or is it more from your position a competitive necessity in some ways that you embrace them?
Yeah, David, I don't think about what's better or worse. What I think about is it's a broad ecosystem. And at the end of the day, AMD has been built on the fact that we think an open foundation is actually quite important, whether you're talking about hardware and software. But you're going to have sort of the largest foundational models, the most advanced, are going to be extremely, extremely important. But you're also going to want to have access to open models, and it is very much the point that we want to let the customers really choose what they need for their business, and we need to do it in a very safe and reliable way, of course, across the board.
I mean, in terms of your two largest publicly announced compute commitments, they are OpenAI and Anthropic, both of which are closed models. I'm just sort of, if I can understand how you reconcile that with the open source message you're also sending.
I think you need all of the above,
David, that's what I would say. I think you have tremendous innovation that happens in the largest model companies like OpenAI and Anthropic. I think the progress in the models just over the last 6-7 months has been enormous. We also see good progress on open models, and I think they will coexist in the ecosystem. That's one of the things that's so amazing about tech, right? You have different solutions for different workloads, and that's the way it's going to continue to evolve. The overarching thing that underlies all of that is you need more AI compute, because
Right, you
there's
definitely
more
need
and
more
more
compute.
workloads that are
I just wonder, do those models get commoditized over time? This is obviously not to your business model, but I am curious about theirs.
I actually believe you're going to continue to value just like you value the smartest people, you're going to value the smartest models. And it's about you need, sort of a range of different technology for the various use cases that you see in enterprise.
All right, so let's just look over the elephant in the room. First of all, it's very clear that your stock started falling after the analysts didn't get to 14 billion, which was a whisper number. A lot of people feel your stock was falling because of something that Elon Musk said that actually was after, and it did not really impact the stock, but I want to go over it. Elon says, this is on this.
Jim, you don't sound too good, brother. Frickin' AMD is expensive.
Architecture. We think it's the best AI computer. We greatly value our close cooperation partnership.
I don't think I can trade it. I don't want to take that risk.
What do you think is the reason why you decided to go exclusively? Because I think you would argue that your compute and your memory are every bit as good and the next generation better than NVIDIA.
Well, first of all, I would say SpaceX is an incredibly important technology company. We have
Very nice.
respect for what they're trying to do.
You're talking, baby.
The technology that they're putting forward, and we're proud of the work that we're doing with them across a number of areas. When I think about compute, Jim, one of the things that I say often, and you've heard me say this often, is you need the right compute for the right workload. And from our standpoint, we have extremely strong roadmap as we think about Helios and going forward to our MI500 series. So. We're proud of the fact that we have broad relationships.
We are proud.
And we look forward to really helping all
fact.
tech companies really have the right compute for the right workload.
All right, so I want to be sure again. When David interviewed him, I think it was on May 20, 2025, he said that he was going to buy NVIDIA, but he also talked about the idea that he felt that AMD is going to buy some from AMD. That is just specifically you're talking about a certain kind of compute, and that you're still doing a lot of business with Musk that I don't know about.
Well, think about it this way, Jim. Our portfolio is
Oh wow, that's cool.
It includes CPUs, it includes GPUs, it includes FPGAs, adaptive computing across the board. And I would say we do business with just about every tech company out there, especially in the space market. This is a market that we think is extremely important and will continue to believe is extremely important going forward. And I have tremendous respect for Elon and everything that he's done. And so we look forward to continuing to partner over the longer term.
Liar.
Right, very good. Now, do I have to start thinking about the warrants? I remember when the warrant deal was done, your stock was dramatically lower. You've had just a huge run, and I don't feel I'm giving you enough credit for that. That's wrong. At what point do we have to talk about how a new share count?
Well, the way to think about it, Jim, is we always look at updating share counts as we go through the various quarters. I think we're still early to talk about that. One of the things about our partnerships with OpenAI and Meta and Anthropic, these are long-term partnerships over many, many years. And then we have both deployment expectations as well as other milestones that are to be hit. So there's nothing to think about in the near term. We'll certainly update when it's time to think about that, and that would be in the year 27 timeframe.
I think you have to think about it right now, baby.
We gotta go a little longer. Okay. CPUs. With Bhutan, I think you would say, good competitor. He's talking about a ratio of CPUs that was originally 4-to-1 for GPU, now 1-to-1. He thinks it's only going to be CPUs.
What a support, man. Look at that. Never right.
Do you see a similar ratio?
Apple.
I actually do see the ratio.
I actually see that Jim Cramer, did you see I called this 305.30 yesterday? Where were you at on Apple? Look at that, pulled right back to it. Give or take 2 or 3 pennies. Whoa! Meta. Oh God, I'm going to kill myself for this one. This is when I made a couple $100 on it, and I could have made, you know what I mean, a good grand. Now it's breaking out. Cockroach. Okay, we got 5 minutes. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, talking about chart patterns, moving averages, and being in the now. And this week I've been on a case study of studying the 10 and the 20 crossover and the 200 SMA, all SMAs. Let's make that clear. SMA gives you a slower, steady pace instead of a fast reaction, which I think some people need a slower pace to keep you in the trade longer or to get you out. I'm really liking the strategy after yesterday. We're going to see how it works today. Monday, I'm not going to count that day because I was in not a very good trading mood. So the 200 becomes support. And the crossover, when you cross over the 200 with the 10 and the 20, is a go. Is a go. Then you use chart patterns to go beyond that. I was going to buy AMD, but it'll probably bounce. There's a big, let you know, candle. If I was to get them, it'd be the 565s. But, I mean, they're 880. SPY broke out. You got 3 white soldiers. Had a real strong signal right down here off the 200. So when you're going through your scan or your watch list, when you have this chart set up, just see where that 200 is, see if anything touches it, and then bring it to my special attention. Look at that breakout on AMD. Yeah. These things are going to jump up. 2 minutes. I bet you they're at 10. Well, we'll see. The 565s. Well, that kind of sucks, cockroaches. Does anybody have any cockroaches? Magnificent, you got any cockroaches in your apartment? Your house? Where you live? If you're thinking apple calls, right to my support. We got a triple bottom right now. SPY breaking out. Support for the SPX. We're going to raise this up to the previous high. A little bit above it. We got parabolic on mushrooms. SPA, Y. Okay, the 585. Oh, these are going to be cheap. I got to go all the way here. Cancel. Might have a chance. Oh yeah. AMD, I still have a chance to get it. SPY. Okay, where's AMD? Well, that's 2 minutes. Three white soldiers. Meta's pulling back. Watch Meta. I'm getting ready to take AMD here. Order filled. Up 14%. Oh, I bet you only bought one. Damn it. Well, I could only afford, I only needed one. Which one did I get? Shit. That's a bad thing right there. I got the 485s. Fuck. I'm out. Nice. Yabba dabba doo. That's how you do it. I'm all out, all out. I got out of my original account. So people on YouTube, I waited for that candle to pull back. After I got in it, it jumped right up to 14%. I got in at 740. And I got out, and it took what? Didn't take very long. And it took 3 minutes. And I got filled at 1402, so almost 100% on the first trade. And that's called an after earnings play. And when you have someone smart like that CEO get on here, okay, well, come on, cocky. I could have got that at 10. They got NVIDIA moving. We got a double bottom on Apple. Watch Apple here. Watch Apple. Watch Apple. Apple. Watch Apple, watch Meta. NVIDIA new high. Then you kind of pull back to the 9 on AMD. Remember how Big C, did you see my video? He probably not even watching. Fuck. There it goes. I don't even want to look. I'm not going to look. Or am I? 1550. There's $500 bounce right there on the bottom of that candle. I should have bought 3 of them suckers. Gonna give you another chance here. We got higher, now look at the body action here on these candles. You got higher low, higher low, higher low. So a little bit higher low, right about in here. Bring it down to the 490s. They're at 975. Apple had a little pop there to the 9. Now the 9's got a break. You had the cross down. 3 black crows with a tweezer bottom. No, I don't want to sell it. What the hell? Dadgummit. You son of a... I made a mistake. I wanted to buy it, but I had the sell on there, and it took me 3 seconds. Fucked me up here. I'm not in it. 940 is what I could have got. It's called an ascending triangle on the 2-minute. Nvidia's coming back to the 9. Watch Nvidia. And I think AMD's going to break out. I could lower it one more notch. But then I could just get it here at $1,000. Yeah. We got a rising wedge on the 2-minute on the SPX. Right now the 63 has been support on /ES. Nvidia's at support. Apple trying to break the 20. SPY just come back to the 9. Looks like it likes the 20 also. SPY on the 2-minute. I'm going to do an SPX here. They're expensive. They're quite expensive. SPY. Shit. SPY on the 5th. Okay, SPY. Get ready for the SPY. The 777 sounds like a lucky number to me. And we're going to get 5 of them. Right about now. Okay. Where did I get in at? I got in at 189. SPY. Should have got 10 of them. Could be a little risky because we're now below the 20. I got in at 189. Probably a mistake here. Let me see. Got a megaphone. Now we're squeezing. I should have got 10 of them. On the SPX, we're at the 9 also. And we're at the, on the 1 minute, we're at the 20. No, no. Kind of slow right now. I'm not liking that too much. Nope. Ah, fuck. And get 5 more. My average is 158. Now we're going to find out here if this works or not. Should have got 10 more. That would have really done the trick. Come on, beach. What was my average again? $158. Now we're at 174. I'm up $145. Come on, bitch. Don't go drawn. On at Spy Cross. I couldn't get out of it. Still a little leery. We do have a fallen wedge now, so it kind of we're at the VWAP on the /ES. That's one good sign. When we hit the 200 on the 2 minute, so we're squeezing right now. It's either going to break out Oh, there we go. Just like that. Damn it. I'm going to get all these things. How in the hell did I get out of here? I'm out. Fuck it. I just can't take that. I'm out. 172. A couple $100. I'm out. So we got, first entry was 189, second one was 128, gave me a total of 10, and I sold 10 at 172. That was a 777. I only took it because of the lucky number 777. Not really. I'm winning again. Randy. One more, I want you to watch my video. Unless you're too stubborn. Now it's going to run 194 frick. Yeah. I'll get it. I'm liking the strategy, that's for sure. I feel more confident in it. I'll give it to you here in a second. PX. You still kind of like the 1 minute now. Look at how this, look at the 2 minute on the /ES, Randy. How we hit the VWAP in the 200. And then we had the double bottom on the 2 minute at open. He likes the 2 minute as well. A little cleaner. And we got a triple bottom coming. Live or do or die. We're at the 63. We got a Head and Shoulders on the /ES. It has to hit the 20. Discipline. There it is. Now, are we overbought? CNBC thinks we are. They're whining again about CapEx. They're whining about SpaceX. They're whining about overbought. They just don't stop it. It's a continuation run of so this is support. If it doesn't, then we go back to the previous high. And we're back at the VWAP. If we don't hit the VWAP, we hit the 200 for a double bottom. The 777s are now at 154. This time I'm going to do, I don't know. I don't want to get complacent. I'm already up $1,000, $900. I've hit my limit. It'd be nice to have a good drop and catch that 200 on the /ES. And I've got the SPY up. So let's look at the SPY. Where's my SPY high? There, no. There's the VWAP. SPY. 1 minute. There's 20 cents right there. We've got a Head and Shoulders. I wanted to get 154. Got a Head and Shoulders. Shit. No. Pull back. Ah, missed it. I just now noticed that Head and Shoulders. Megaphone, 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 megaphone. Ah, that would have been a good one. That would have been a good one. $400 if I got 10 of them. And then if I'd have grabbed that wick, oh. I got my order ready. Turn that fan off. My fingers are feeling cold. Okay, here we go back down to support. If we can hit this shoulder one more time, that would be so sweet. But they'll get the buys coming in. This is a megaphone. This is some call it a diamond shaped pattern, but I've got inverse head and shoulder pattern with a megaphone, and this is one way to cut this short is to take your gummit right there. It would have been 20 cents. Make this into a head and shoulders. And then you can take that. That would be the inverse head and shoulders support. And then this would take you down below the 200. That's a wide mouth megaphone. So I'll raise that alert up above to the 200. He'll probably come back up here. But I'm going to take it here. I can't listen to these bear cats. Not if I want to trade momentum. Trump assassin caught. Another left-wing wacko. You're liking it, aren't you? Good morning, Arm. Watch my video that I put out for the new trading strategy that I'm working on all week, case study. And I've had one bad trade this week so far. And that was my fault. Not the strategy, my fault. See here, these things, I could have got 160. Now they're at well, no, they were at 180 a second ago. I'm going to wait. I'm going to wait for the pullback, see if we get that right shoulder, and then add. We might just go sideways today because we've had such a great run. We're talking about Oracle. Gold price rise. Didn't I mention GLD the other day, Randy? You wanted to swing? Look at GLD. I called that one out when you wanted to swing. Look at that monster. Look at that monster. It's going. If there's peace in the Middle East, gold will fly. You got to think of the opposite of these. Bottoms in. Well, they're not going up much. I'm going to wait. I want to see if we hit this right shoulder one more time. I'll put it right there, the alert. Oh, yeah. Hi. There's a real solid spot right there. Just one little knife. And I'll get this sucker down to like 130, 140. You got 10. Not in yet. I just got to push that green button. That'd be $1,600. Right at my limit. Come on, one more red candle. We're coming to the VWAP on the SPY. So you want to watch that spot too. That's on the 1 minute. 1 minute tells me we're going to go lower. We got a triple bottom on the 1 minute. This could be the spot. The 10 is crossing the 20. I had my chance. I missed it. See that crossing the 20 right there? The 10 crossing the 20. I should have grabbed it right there. But it wasn't cheap enough. Now if this body comes down, heck, so the 1 minute we got a triple bottom at the VWAP, so that was a good enough spot. Shit. I missed that. That was perfect. I just noticed that a little bit too late. That 9 crossing the 21. Now GLD, you got 4 white soldiers. So the previous high will be your alert off that wick, and the 9 and the 10. And that'll be that's that third soldier. I'm going to put it right there in my alert. For GLD. Got another announcement. I'm still waiting. It's depreciating some. We got a squeeze on this SPX. Shop, NVIDIA, Dell, CMG is up 91 cents. STX and CAT, PANW, AVGO, they're always the same ones. Today's losers, SpaceX, AMD. That's it. AMD down 28.90. I'm going to keep watching my GLD new high. SPY's coming down to price. We're see, these are all higher lows. I'm afraid to jump in unless we hit that 20, the body. I mean, this is a spot. Now, 145, 144, and if it drops on down, there's my price. There's my alert right now. I'm in. We'll see how this goes. Triggered. Triggered. The 777 calls. $135, $136, got a hold here. What was my entry? $135, well, $136, $135. Oh, I got in $139. Not good. Not a good entry. Back to even. Shit. Don't do it. right here. Can't go no lower. Got to hold. We're at the 200 on the 1 minute on the SPY. Now we're at a double bottom. That ain't good. We're going to find out here if this thing's any good or not. Breakout, baby. 3 black crows with an inside candle, hard money so far. I missed my little entry right there. We're going to double down. Now, let me see. What's my average? Average is 132. Let's go. Break it. Break it. Got 40 of them here I'm going to sell. 20, I mean. I need to carry on here. Don't still back. Shit, I missed it. It's a big inverted hammer. It's kind of bullish. We had one right here. Same exact pattern. We're staying above the shoulder line. We had a double bottom higher, triple bottom higher low. It hasn't crossed under it yet, not on the 2-minute. Not on the 2-minute. It can. Use the 10 SMA and the 20 SMA. Fuck. Come on. Don't do it. It's a little harder today. It's a little bit tougher today. Now we've got a triple bottom on the 1-minute. Attempting to add another two grand to it. Yeah, this is not going to turn out too good if this don't stop. You got to stop. Now it's starting to cross down. Oh shit. Here comes the 200 on the 2-minute. I'll know my faith in this trade very shortly. Right here. This ain't good. Might just keep going. Come on, you beers, break. We're at resistance. 77483. I'll write this down on paper. Where's my pens at? Okay, I need. Got a break. Let me get my other thing up here. We're at 103. So that last entry was at 81. Kind of having a hard time So right now I'm not feeling that positive, but I'm still in the trade. I'm at 115 average. I'm at 2,700 in it, I think. No, gonna drop. I'm competing with the fat cats. Not good. Whoa. I think the Bears are in control. It's just wore out. It's just wore out. Now we're under the 200, so that's not really good. Come on. This is not good. Yeah, this is getting scary now. Let me look at SPX. We're right at my support on SPX. Yesterday's high. Let's see if we hold support. This is it. Last one. Go a little bit lower. Dadgummit. Moved over on me. Definitely got to break the 200. We're going to see what you're made of here. This is the first consolidation we've had. And we're at the 20. If that breaks, we got a better chance. No. Now 1 minute, 1 minute looks good. There's a doji. Yeah, it's had too good of a run. Everything has. Let's see if the Bulls got enough courage to bring us back up here. Break it. I'd say the 200's heavy. I knew it was going to pull back. I don't know why I jumped. Come on, break. There's some tape coming in. What's going on here? New audio device detected. I don't know why. Switch device, don't switch. Can y'all still hear me? Yay? Yep. Yeah, you can hear me. Let's go. So we got 3 white soldiers. That's kind of a sign. Now if we can stay above the 200. Tense trade. I wanted to stay above that 200 there. Let me see what the SPX is doing. We've got the VWAP. We're at support. So that don't look too good. Damn it. I was getting somewhere there for a second. SPX triggered. Yeah, they're coming down on it. Whoa, big drop. SPX, where are you? Into yesterday's close. That's a pretty good drop there too. What's with the puts? If it doesn't go anymore, I'm going puts. 773s. We're at the channel again, at resistance with the head and shoulders. Left shoulder, head, and right. We're back at resistance. I'll go get my tea. Very bearish right now. 1, 2, 3 with a wick. 1, 2, and a Head and Shoulders. A sweet spot. Could pull back down to that pivot point and then break, but this is it. This is one of them. Da, 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 da. We're in the cloud on the 2 minute and out of the cloud on the 1 minute. I think it's stripped also. And then that east side door where we tightened up the screw. What's SPX doing? SPX has to break the 9 back to the VWAP. Oh well. We got more room to fall on this SPX to the 200. Stocks rise on multiple major indices, hit all-time highs. IWM's got to break. Let me chalk that down. $301.50. How did I get two SPXs on here? Got a temptation here. I mean, this is a squeeze. It's an exit idea or hold on. Definitely at a resistance level. Same as the SPX here. Breaks that 200, man. We're off to the races. Symmetrical flag on the 1 minute. So let's look at the 2 minute. Definitely on the 1 minute it wants to break. 2 minute not so much. In the 5 minute very rarely. 5 minute don't look good at all. The 9 just barely crossed the 20 there. Okay. Here's the SPX. Never grow old. Microsoft's the only one down today, and Tesla, and Amazon. Nice move on Apple. At a double top, the temptation of an ascending triangle with 3 white soldiers on the 1 minute. You're going to have to hurt and do something. I'm going to get very impatient. We're at the 20. Damn it. Break it. Spinning top, spinning top, spinning top. Higher lows. Ascending triangle. Well, kind of. It's squeeze, baby. NVIDIA has a crossover. Meta's taking a hurt. We got a fallen wedge on Meta. Hits that 20 and it goes right back down. That's 3 different times now. More drama. SPX is at the 200 right here. More drama. We're right at the 200 on the SPX. I'm going to give this a shot. No, I'm not either. There's my low support. Where's SPX?
Wide put spread done for a $3.10 debit. Look, this trade we've recently traded is well below.
Got a big old hammer after these crows.
This trade is right in the zone of where we believe again when Marvell gets back into trend we'll head down to.
All right, Rick, so as we look here at Marvell, what levels are standing
Marvell
on this chart? There is an earnings event at the end of this month that does come in.
Yesterday's low, yesterday's close, that's like the lowest support. That's a bottom line support right there. SPX's. We're bearish. And 772 puts ain't moved much either. Definitely had a solid support. We'll just have to see how it goes from here. And I ain't going to take the call until it breaks the 20. If it does. Right to the penny on the support. Almost. Jim's still in calls. He sold some of them. He's still in them. I'm getting burned. Right now, you got low volume. I think people are scared. We've had real good 2 huge days. So I don't know. I don't think this is going to rebound much. Snake breakout pullback. I still ain't jumped in the SPX yet. we've had all kinds of chances. Last year, that east entrance door, I messaged you about it, and we tightened up a screw down there. But I'll look at it again tomorrow, but that one upstairs is definitely in bad shape. Yeah, this is not working out. Hate to take a loss. But I'm just too far out.
Rick, you can see the downward sloping line here that we're seeing, but as far as the technical setup, what are you seeing?
Yes, not a lot of progress on these major products. I don't think I'm being unfair if I mention the metaverse, which was a gigantic flop, unfortunately, for them. But
oh boy, coming down hard on Meta.
That stand out to me, 520 being our 52-week lows that we came close to. We didn't quite retest them that, but also 540.
They keep bringing up metaverse.
So
they've done that years.
The upside there, we retested it then further down the road. So that could be one area that we would find potential support if we were to move lower. Another gap here stands out between about 566 to 580. That was around where we had our recent relative lows here after a sharp rally that we saw during the past trading week or so. Meanwhile, to the upside, another gap here, 614 to about 628. That 628 level roughly lines up with the highs and subsequent lows. 643 also stands out as well as another area of interest. When we advance our chart and think about our moving averages, in this case, more of a downward trajectory is what it reveals here. All our moving averages are reflecting that the faster ones are below the slower ones here. They're mostly diverging apart from each other with the exception of our 5-day EMA in dark blue, which we are approaching once again here. That comes in near about 582, 583 or so. We also seem to have failed to overtake our 21-day EMA in teal that comes in right around 599. Even though we did have this upside breakout from our trend line, RSI exhibited a matching trend line, we have not cracked that 50 midline yet. So that remains a bit of a fly in the ointment for hopes of a bullish rally here that would indicate a broader trend change.
Tesla's at a triple bottom.
Point of control, the heavy trading area here on our chart, that's our thick red line. 606 is where that one comes in. We haven't quite managed to crack above that one yet either. So that remains another layer to our resistance idea.
Google had a
that we're
double bottom.
developing. 570 also is a smaller node, as well as right here, this very small area near about 535 or so.
All right, I will never forget covering someone buying a $40,000 fake NFT digital treasure trunk from Louis
Triple
Vuitton
bottom on Amazon.
and having to figure out what a non-fungible token was.
Think SPY may go up some? I think so too. We got to break the, I mean, we've held the old resistance. I'd like to see it get back to 77445 at least. But we still got to break that 77283. Dead in water.
More than 8% today. I do want to head out to the New York Stock Exchange, though, for a check-in with Nicole Petalides, host of Opening Bell and The Watch List, to talk about, I guess we could say, one of the more under-the-radar earnings moves today, but it was very top of mind yesterday when we were covering the earnings live. We're talking about Arista Networks here. They're moving higher, up 4%, which is certainly nothing to shrug at after a strong report. So can you take us through the numbers, please, Nicole?
In fact, moving to new highs of 214.89 today. The stock was up over 13% today on a great report where they beat the street on the top and bottom line, also raised guidance going forward. And the story for Arista Networks is that AI demand is real. Here are some of the numbers as we look here. And by the way, all the analysts are also getting on board and upping their price targets and many buy ratings today. So you saw 102 beats 89 cents, and the
$3.04 billion, beats the $2.83 billion for the revenue, and the outlook and guidance was strong. In fact, they see earnings per share going forward, 106 to 108. The estimate is for 92 cents, and $3.3 billion in revenue for the third quarter, and the estimate was $2.95 billion. In fact, the CEO saying this was their first quarter above $3 billion, and the CEO said customers really see networking as the central nervous system for infrastructure, from the client to campus to data and AI data centers. This is a hardware supplier, and so to address some
Amazon's still dropping
shortages, Aristanet increased its manufacturing and distribution capabilities and capacity. They've also negotiated better delivery terms. So by upping that manufacturing and distribution, that helped them along. Also, they managed to handle costs on these negotiations. For example, when you look at the operating margins, 49.9% in this quarter, well above what we saw last quarter, 47.8%. And they did note that last quarter was similarly strong as far as demand. So it tells the picture that the AI demand is real. This is a key supplier to data center hardware. And you think about all the things that they supply, switching, networking, these are all crucial to data center operations. And so as a result, it has certainly been a winner. And you've seen price targets like Goldman Sachs, 225, and Rosenblatt, 280 today. Marlon.
All right, ANET seeing that nice pop, that new high here, a nice move to the upside, getting a little overshadowed by some of the other big movers too, but Nicole, really appreciate you breaking all of that down for us. Nicole Petalides. Now it is time for the disruptors. Alex Coffey, our senior equities contributor, here to take a look at DoorDash today. We're going to get those earnings after the bell today, Alex. What is the street expecting here for DoorDash?
She's cold.
EPS for the second quarter is expected at 50 cents, and this would be a pretty steep decline year over year, but that is expected. $4.32 billion is what is expected for revenue. Now, this is actually a number that's pretty healthy growth rate, well into the 30% range, but it is deceleration from recent quarters where 2 quarters ago 37%, last quarter 33%. If it were to hit that number, it would be a little bit less, but still sequential growth on that metric. When you look at these companies, one of the big questions down, several years ago was profitability. It's relatively profitable. Adjusted EBITDA is expected around $843 million.
Apple's coming back down
as well. Analysts, larger buy camp, almost 80% of analysts say to buy. There are 9 holds, which account for 19%, and 1 sell rating.
We're not bullish until we break the 20 on these stocks.
An analyst shop, Bennett Shear, there standing alone with a more negative outlook on DoorDash. But all in all, it's been a nice last several weeks in terms of performance for DoorDash, but a rougher last year. Stocks down about 20% over the last 52 weeks, flat over the last 6 months, but it is up over 5% in the last month, and really 6% of which in the last week as well. So stock really starting to maybe make a turn. And I didn't send a chart, but I was listening to Big Three, and I recalled when I was doing that, and we sort of set up the sort of traffic light look for this. So if I were to have done that for DoorDash, the red line would have been up around 250. The yellow line, which is pretty close and relevant to the discussion today, would be around 200, and then the green line would have been down by 150. So at a pretty critical pivot point, and it seems we're trying to break above that area right now.
All right, so if we're looking for a breakout just in advance of an earnings report where we're looking at 80+% of analysts being bullish here for DoorDash, how would you then look at structuring an example trade?
Yeah, so if you're kind of following my line of thinking, which is the story's relatively understood, the fundamentals have largely improved, but I don't know that there's anything extremely exciting in the expectations. They can always exceed that. But from a technical standpoint, things certainly improving in a pretty critical level around 200, which is not only psychological, but also relevant technically, pretty nearby. What I looked at was selling a put vertical anchored at that level. So most importantly, it's risk defined. If that level doesn't hold and it does break,
you got another flag.
You know your risk going in. If it's sort of a neutral response, maybe it goes down small and it catches that support and stays there, this trade would still work. And then, of course, any positive reaction, it would work as well. But with that, it's the 200 and 195 short put vertical expiring at the end of this week. So keeping it short dated so that it is truly an earnings related trade. $1.50 credit would be 30 cents for every dollar of risk.
Definitely a flag on the 1 minute.
Risk reward here, that is about 3 to 7 on that. So you risk 350 with a chance to make 150 with a break even at 198.5.
All right, with your break even at 198.5, we are above that. We're at 205.76 coming into these earnings, which of course we'll have after the close today. Alex, really appreciate you breaking that down for us today for Disruptor, taking a closer look at what we might expect from DoorDash and for that example trade. Coming up next, we're going to spotlight NICE. The software stock under some pressure today after its third quarter sales guidance came in below estimates. CEO Scott Russell will join us next.
Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes you know.
Next. Try it again?
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews,
Amazon's taking a
and
beating.
insight from analysts, founders, and market voices you trust. The Watch List,
AMD
2 p.m.
bounced off the
Eastern,
200.
only on Schwab Network.
On the 2 minute.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the software industry. NICE moving lower after the software company issued third quarter sales guidance that was below the street's estimates. The company did have a record beat on the top line and the bottom line for the trailing quarter, though. To take a closer look at the numbers, joining us now, Scott Russell, the CEO of NICE. Scott, great to have you on. Let's talk about where you exceeded here. You exceeded your revenue guidance. You delivered 8% year-over-year growth on the revenue front this quarter. What were the biggest drivers to the upside?
Yeah, it was a stellar quarter. There was 3 real drivers that we saw. Number one, the AI growth is real. So our AI backlog grew at 72%. Our total cloud backlog grew. And what that has been is 4 quarters in a row of record bookings growth that we've now converted into revenue, where customers are getting real value out of their CX platform, changing the way you experience engaging with the brands that you love. The second is we were able to get real momentum through our partner network, our systems integration partners delivering multiples higher in growth that is allowing us to leverage that ecosystem to be able to fuel more adoption, more deployments, and more value for our customers. And last but not least, our financial crime and compliance business had a stellar quarter, particularly with product growth that allowed us to, as you say, overachieve and be above the high end of our range, and also allowed us to be able to not only be at the high end of range of EPS, but we also lifted our earnings per share on the full year as well.
And so let's first look at this cloud-driven growth. You had another strong quarter here. We've been talking more and more about adoption, enterprise adoption. Are you seeing demand accelerate, or are enterprises just simply becoming more comfortable with this concept of having to invest in an AI-powered experience if they want to keep up?
Great question. What we're seeing is customers are being more prudent with their decisions on AI. So the pipeline and the growth and the demand continues to increase, but they're no longer spending money on experimentation, pilots, proof of concepts, evaluations. They're not going to spend tokens. They're not going to spend dollars. That is not going to give real returns to their business. And so what they're now doing is they're saying, I want outcomes. Now, in our world, we're able to deliver that at scale. So that's why our bookings growth has been so strong, because we've been in the world of customer experience for a long time, decades. But with the AI capability, we can increase handling time. We can improve containment rates. And what that means for their customers is when you interact with their brands, you get a great experience, you're able to get the resolution of the needs that you have, and you're able to get on with your day having a great interaction, whether that be with a human or AI. So what we're focused on now is realizable outcomes, measurable return on investment, and AI is prime time in our market, whereas 9-12 months ago, that was still in the experimentation phase.
It's all moved so quickly, Scott, and what's become palatable for these companies is also moving at a rapid pace. They want to see the return on that spend, and you said they're being more deliberate with that spend. So from your customers, where are they seeing the fastest return on these investments today? What areas are they seeing the most improvement in the use of this AI?
Yeah, it's really evolved. So what we saw previously was the use of AI agents for simple tasks, authentication of who you are, a voice agent is able to then verify maybe password resets, verification details, simple knowledge-based inquiries. And then the second we saw was Copilot, so helping a human agent who is talking to a consumer and helping them get better answers, more quality answers in a faster time frame. It's pivoted. Now what companies are looking for is really complex workflows. I'll give you a quick example. Lufthansa, world leading airline brand, they use AI agents with nice cognigy to be able to do flight rebookings, to be able to do hotel cancellations, credits, refunds and returns, all through our native AI platform that allows them to do that without being needing the human agent involved. And if you think about scenarios where there's a storm, we're able to proactively help customers already do those rebookings through AI that 12, 18 months ago was only a dream.
And Scott, as we look at the macro backdrop, I mean, I spend most of the day talking about the macroeconomic backdrop that we're dealing with. Are you seeing any hesitation from customers because of what we have here with the higher rates and it's seeming as if it's going to be higher for longer? Or is AI spending really proving to be resilient?
I think it changes and depends on the segment. So all I can say is in the world of customer experience, because we've proven the ROI, the demand profile has proven to be durable. They're going into more complex use cases, as I mentioned, rather than simple, easy scenarios. But I think what enterprises are very clear about is that they will only spend if they can get durable return. And that is different to where it was 12 months ago. So we feel really confident about the demand outlook, but only if those returns. And that's why you're seeing companies like NICE offer outcome-based pricing. We're giving assurance through our commercial models that you're going to get the benefits, and we're able to do it at the complex scale that they operate when there's millions of interactions with humans and AI involved, and it's unified under a single platform. So it does vary by industry. I think in the world of customer experience, the only other thing I would say is quality matters. It's got to be available. You don't want to be interacting with that it shuts down, so it's always got to be available, always got to be high quality, giving the right responses, which means the data, the preparation, the governance, they are really important elements when we roll out for our companies because it affects their brand reputation, it affects their customer satisfaction, and they are some of the key criteria, whether it's AI or human.
Scott, really appreciate you taking the time to be with us today to take us through your results, and also love to get your perspective too on the trends that you're seeing across your customers and how they're relating to AI adoption. Scott Russell, CEO of NICE, really appreciate you being with us today. Coming up next, we've got our 360 round. We are going to dive into SpaceX's first earnings report since going public. The stock selling off this morning, and it continues to trade below its IPO price. We'll have that and more when we come back.
Trade powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey. helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Back at support. This is bottom line support right here. I'm getting ready to take calls when that thing crosses that 20, if it does. NVIDIA's at the 200 right now. AMD hit that 200, bounced up, pulled back. Now we're kind of sitting there. La-ti-da. Wish I got in on them puts. Well, they didn't go up much. Yeah, they did. Okay. Back to red, back to even. So let me go back to this. Let's go over the watch list. SpaceX, definitely. SpaceX support. I'm going to clean this up. Well, so we can't take any trades until that blue crosses. AMD, right now, still a little bearish. Meta, look at Meta sell off. Nvidia hit the 200, and we got a curl up on Apple. No possibility of a breakout here on Nvidia. And we got Apple. Got to break the 200 before it goes. Oh, shit. Hello. Yep. Yep. 60% off. No. No, I didn't think about it. Sorry about that. It's active.
Do we have to do the evaluation again?
No.
There's no evaluation?
No.
How come? Is that rid of that?
It's just, yeah, I guess. You already have one evaluation in. Your first. No. Where it says just new account on there, just push that and put in your stuff. I had a bad day today. Yep. So I'm definitely starting fresh. Clear side, clear. Yep.
So let's see if we can find some reversals in this account.
Yep.
You know what I mean?
Yeah, I do. Yep.
And so now, so he did clarify, okay, that we don't need,
Just average. Yeah. Yeah.
we don't need, if you make more than 200, they don't care. As long as you make 200 minimum for 8 days straight, you can do that.
Yep.
That's what he said. I clarified that. Because I thought, how am I gonna make, you know, how am I gonna make the money?
Pull back that we're seeing today, the stock's still up 2%, so that 50% beat on revenue or year-over-year revenue rise, really good, right? AI data centers came in about $500 million more than anticipated as far as revenue goes. So it was a good report. They raised revenue, moving forward. And then you listen to the commentary from Lisa Su. She came out, post-conference call and said, hey, we're expecting, to double our revenue over the next couple of years, especially in the AI space. It was a good report. I just think this is some profit taking, a little bit of exhaustion. It's still on a valuation basis, on a forward 12-month PE, it's still elevated. You're seeing that push maybe out of AMD and back into NVIDIA. NVIDIA's got a breakout going on right now in the shares, which had been lagging in this space. And as far as forward valuations, NVIDIA is a lot cheaper than AMD at this point. But it was a good report across the board. I mean, there's no cracks in this one. I just think the stock and the price action's gotten a little bit ahead of itself. The valuation's a little bit expensive for the space at this point, and that's why you're seeing maybe this pullback post earnings in the stock.
All right, Kevin, what's your big picture take on AMD?
Yep.
I thought the numbers on earnings per share were good. I thought the numbers on revenue were good. I thought the guidance was good. not real sexy though. No big outlandish beaten raises, although they did guide higher. But I think the biggest news about AMD today is Elon Musk. Remember, a lot of the whispers before earnings were, can AMD start to cut into NVIDIA's market share? Elon Musk came out and said, we're going 100% with NVIDIA. That's not the rhetoric that you're looking for if you're AMD. So even though some of this, and remember, Tom said it right, stock's still up for the week. So it's not like it's crashing or anything. There's no significant sell-off. It just gave up pretty much what it gained yesterday. So all things considered, with as much as this stock has rallied, this is a flesh wound. But that news from Elon Musk choosing NVIDIA over AMD.
Yes, that's
remember,
right.
He was using both
I don't
before.
know.
He said he was going to use both. Now he switched to exclusive AMD.
Yeah.
That may be wearing on. That's why NVIDIA is higher, and partly because of AMD being lower, I think.
All right, let's talk about Elon Musk. Shares of SpaceX coming back down to earth. That stock down 8% right now after logging its first quarterly report as a public company. They beat. CapEx concerns seem to be weighing, though. Tom, your take.
Yeah, everybody's kind of getting excited. CapEx went up to $18.4 billion this quarter, and then you look at what some of the other companies are doing as far as CapEx goes, the hyperscalers, but this is probably the thorn in the side of this one. Now, the stock was up pretty significantly over the last couple of sessions.
We're going back down to the 200 again on NVIDIA. Now, Apple's the one that broke.
Look at some of the commentary from Elon Musk about their expectations moving forward. He said SpaceX would hit $1 trillion in annual revenue in 2030 versus a previous forecast of 2031. That's probably a positive, but you know what? They have to spend money. The content that everybody wants out there, they've got to use that. The different segments within their industry, whether it's Starlink, some of the launches, those are going okay, but they're not money makers at this point. They did see a nice jump in subscribers to Starlink. I believe it's above 12 million customers now, so that's been continuing to rise.
Yep.
I think this is just one of those stocks that you have to be patient to kind of get to where Elon Musk wants to be in maybe 2 to 3 to 5 to 10 years at this point. And that lockup period that's coming tomorrow. How many million?
One of them days when Apple ain't following the rules. We got a NVIDIA double bottom on the 200 here.
Probably a concern. There's a lot of uncertainty around this stock right now.
So I can't take.
Kevin, what's your take?
We're squeezing. Meta still ain't done its thing yet. It's squeezing, but it hasn't squoze. And AMD now might get somewhere. We're definitely squeezing on NVIDIA. I don't know yet. We got the setup here. Let me see. Launch. NVIDIA. Oh God, them things are cheap. That can't be true. NVIDIA's calls are cheap. Too cheap. Out of the money. I'm not doing it. Let me see where AMD is. AMD's got a triple top with a rising wedge, or a rising bear flag. There's NVIDIA. If it breaks above the 9, the 215 strike or the 217.50. Uber plunges after earnings. But then Here we weren't above it. We came back down. Now we're above it. And slash ES. Nasty looking. SPX dropping more, SPY dropping more. I'm not trading until I feel good about this market. Right now I'm not feeling too hot. Although we got a nice little setup on Apple. And we're squeezing. We're definitely squeezing on NVIDIA right here. There it goes. Just can't make up my mind. Looked like it wanted to go right there. I mean, they were at 233, now they're at 212, just like that. I'd be careful. Today probably ain't a good day to be playing around. I was at 1,200 plus, now I'm down. I want to see if I can run two of these at once. Now we just have to wait. That's right, Joe. Apple's coming back down again. You just can't trust these right now. We got a triple top here on AMD. It's, and then we got the, still got to break the 10. There we're starting to break the 10. What did I say, Apple? Oh, that's a low blow. That's a low blow. NVIDIA did break out. Now it's at 253 from 212. NVIDIA. We'll see if the others follow. We got Meta. We got AMD. Broke the triple top. Nice little run on the video. Man, these things are so cheap. That over there. No, I don't want that one. Okay, I got you. Didn't want to break it. I ain't taking it till it breaks it. Same as Apple. Apple's got to break it. We had the triple bottom right here to the 200. Did you see that? Big C, are you listening? That's on the 2 minute. There goes the SPY. And 72. The 772s are up 100%. We're back to bullish land now. We're above that. God, what a sell-off. Now, are we going to break this resistance? This is big time. 771.80. IWM did break. Let me see. I got to give this to. $305.54 has to hold. I got to run to the bank here. So Google's down 14%. Big will sell, and there we are, right at resistance. Right at resistance. Was support. And then we got Amazon. Really big hard sell off there. WDC. So the 9 EMA did pretty good on the 2-minute. We got the 63. This is a big old engulfing candle, which is a good sign. We're going to be up here on SPX. Real good sign. If we break here, then we got the 63 on the 2-minute right about now. 7750s are up 110 bucks. Actually, more than that. Slash ES is about to hit the 63 on the 2 minute. The 1 minute is telling me that we're bullish. That we got to respect the 63 on the 1 minute. We're just now crossing. We broke definitely out of the snake. Three white soldiers on the 2 minute on the SPX. We got the crossover 77.49.93. You're at 12 bucks. Randy? Yes, I did. My fault. Now we're going to come back to the 9, or we're going to stop at the top of this candle and respect 960, 950. I don't know if the day's normal net yet or not. We're definitely at the 63 on slash ES. We can come back to the I might just keep trading SPX. $950, $970. God darn it. I knew it was going to stop there. Let's see if I have any more messages. Commerce fraud card. What? Oh, whoops, whoop.
Thank you for calling the Commerce Bank Card Security Department. Please hold for the next available representative. Thank you. Please be aware that this call may be monitored or recorded for quality assurance or security purposes. Press 1 if you are calling regarding your consumer credit card, debit card, or prepaid card. Press 2 if you are calling regarding your commercial business credit card. Due to heavy call volume, you may experience a hold time of 10 minutes or longer. Please accept our apologies for the delay.
Fast, convenient, and easy way to send and receive money with friends and family who have a U.S.-based checking or savings account. Typically in minutes when both users are already enrolled. With just an email address or U.S. mobile number, you can send money to people you know and trust, regardless of where they bank. U.S. checking or savings account required to use Zelle.
Thank you for calling Commerce Bank. You are important to us. We will be with you momentarily.
Our identity theft services are designed to help you fight fraud by staying alert. Learn more about Commerce ID Monitor online at Commerce.
Got a Head and Shoulders now.
Fight fraud. That's Commerce.
Still respected the 9.
Fight fraud.
What you got? 76670.
What can you do to be set for retirement? Is it better to pay down debt or reinvest? Are you getting the most out of your money? If you have questions like these or any others, let us know. We're here to help you find the answers that matter.
Looking to buy your forever home? We'll make your home buying process easier. Visit commercebank.com/mortgage to check rates or apply. Equal housing lender.
Landon.
Put your finances at your fingertips and connect wherever you are and wherever you go. Sign up for online banking at commercebank.com on your desktop or laptop computer and download the Commerce Bank mobile app for your mobile device from the Apple App Store or Google Play. Commerce Bank, member FDIC.
Someone tried to commit fraud on my checking account. I'm calling them up.
Thank you for holding. We'll be with you shortly. Commerce Bank, member FDIC.
Hey, this girl once ripped me off $2,000.
If you are considering refinancing your mortgage, we have solutions to address your needs. Looking to switch loan types, cash out equity to address other costs, or pay less interest with a shorter commercebank.com.
Snake breakout pullback.
Equal housing lender.
Is your contact information up to date? Please take a moment to review your contact information in online banking and make any necessary updates.
Now, I think the spending obviously is justified. A lot of it is involved in gaining new markets.
Justified.
There is.
Thank you for calling Commerce Bank. We appreciate your call and we'll be with you momentarily.
I'm gonna make a cup of coffee while I wait for this. I'm not gonna take a trade while I gotta make this call.
Have you heard about our Refer a Friend program?
No.
You can earn up to $1,000 in Visa reward cards
Oh,
per
damn.
calendar year.
$1,000?
Open and use a personal checking account, personal loan, or vehicle loan at Commerce. Learn more at commercebank.com/refer-a-friend today. Commerce Bank, member FDIC.
He's back, Jake Paul. We got the snake breakout pullback on the SPX. I didn't take it.
With early pay from Commerce Bank, get access to your paycheck or other qualified direct deposit up to 2 days earlier. There's no need to enroll. Just set up a qualified recurring direct deposit. Or if you don't have a Commerce Bank checking or savings account with direct deposit, apply online today. Visit commercebank.com/earlypay for details. Commerce Bank. Challenge accepted. Member FDIC.
Hurry up. I got time to play with you people.
From setting short-term goals to planning for your future, if it matters to you, it matters to us. Together, we can find the answers that matter. Commerce Bank, member FDIC.
Zelle is a fast, convenient, and easy way to send and receive money with friends and family who have a U.S.-based checking or savings account. Typically in minutes when both users are already enrolled. With just an email address or U.S. mobile number, you can send money to people you know and trust, regardless of where they bank. U.S. checking or savings account required to use Zelle.
Thank you for calling Commerce Bank. You are important to us. We will be with you momentarily.
Blah, blah, blah.
Our identity theft services are designed to help you fight fraud by staying alert. Learn more about Commerce ID Monitor online at commercebank.com/fightfraud.
We're calling you to tell you that your account's been jeopardized. And we want to make sure that you made this purchase for this door. Pay down debt.
other ones is probably right there. It might be bigger than Uber Eats. So it's definitely a concern for them. We can't measure that. We can only measure, how DoorDash customers are feeling and what the demand looks like. Demand's really strong. Happiness is really strong. But we see anecdotally when we look specifically at the data, people talking about these local services, we just can't track all, the hundreds of them that are out.
So I didn't think about this, but Uber, have you ever been in an Uber car and it smelled like McDonald's?
Thank you for holding.
That's one of the biggest complaints. Second, sexual harassment. But he says that's up to the driver, if he's doing Uber Eats or doing Uber food.
Cash out equity to address other costs, or pay less interest with a shorter term loan. We're here to help you take the next step.
I can't trust this crap.
commercebank.com
I ain't in a trade. That last one kind of scared me. I was on a roll too. God. James, you're on hold for 10 minutes at least. I'm gonna go make my coffee. We're above the 9, so we're still bullish. I'm not in the trade, but I thought about being in it. I'd get in it right here if I knew, and I don't feel like nothing's gonna hold today. Coming down to a triple bottom. If we're true to the 20, this would be the spot. So I'm going to grab one right here. Fuck. Come on, triple bottom. triple bottom. Break. Break it. Break it. I'm up 12%. I think on a day like today, I should get what I can. Show some strength. I'm at 11%. It's almost worth selling now just to get the frick out of it. Should be more than 790. And that big old candle, come on. Fuck it. You bitch. Ah. Oh, I didn't see the right shoulder line. We got to break the head and shoulders. Come on. There it goes. I'm out. Fuck it. $157. Probably get more out of it. Oh, I got out at 8. I got more than I could have. Should have. So that's cool. I wouldn't think almost even on a day like today. Think I was almost even too earlier on that big trade and I got screwed. Randy. They're at $8. Oh. Hello, my name's James Howard. Oh, I got this fraudulent alert on my checking account, and it's not fraudulent.
Can I have the card number?
Yeah, give me a second. I'm gonna go to my bathroom so I can hear it. I'm live on YouTube. Okay, it's my name's James Edward Howard. It's 4412-5100-0410-3612. Last transaction. I have to look at my checking account. I don't know. Well, the one I'm being fraudulent against is 135 something.
What's the name of the merchant?
Options trader.
Okay, thank you. Your that charge is valid?
It's valid.
Okay, thank you.
Is that what you needed?
Yes, I'll be security watch real quick. You use the card.
Excuse me again?
I have the security watch real quick. You use the card.
Okay. That means I can use it.
Yes.
Yes. Anything else? You have a great day, ma'am. Jesus loves you.
Thank you. Thank you.
Yes, ma'am. Jim, someone tried to take $20,000 out of your checking account. Who was that? Oh. Anyone bank today and you guys still struggling? No struggle. See, I'm glad I got out of that. Kinda. It's still at 8. Okay. Back. La 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 la. So we're still respecting the 20. If the things are starting to make a little sense now. This is called a pennant flag. Pennant flag coming from the bottom up can usually have that kind of effect. A pennant flag coming down would have this effect. For example, I'm a little shaken today. I lost like $1,200. I didn't appreciate that. What am I doing here? Okay. Oh, shit. Coming down, that's a bear pennant. Going up, that's a bull pennant. But sometimes you can't rely on the bull pennant to break out, because sometimes it can pull back and retest and break out. If, you know, it's not as strong as the ascending triangle or breaking the in head and shoulders or inverse head and shoulders, triple bottom. And that's probably one of the weakest bull flags that you'll get. And you always got to be on your toes when you're taking it. It's called a symmetrical flag. You hear me call a symmetrical flag on the way down? Just the opposite. Sometimes these will break out. Depends on news or a headline. This is definitely a bull flag that I've been talking about. When it goes down. Now, bear flag is if it goes down and goes up, that's a bear flag. See, going down and going up, that's a bear flag. Going up and going down is a bull flag. Now we're at 590 on them calls. So I got out in time. Let's see if we hit something important here. We broke the 20, so that's you got to, if you're in that, you got to think about, as you start to go down 20, you got to think about it. Support and get out of that trade. But now we're at you see this here? You see this pennant flag that goes up? Now this is a solid support right here. If it holds, it holds. Now, would I buy it? Almost. I'd almost buy it. Because I've seen them bounce off that trend line. Off what was resistance, now comes support. 1, 2, 3, boom, support. I just kind of got the jitters right now. I really don't want to take too much risk anymore. If you've had a successful day, I'd wait. So I'm going to pull that pennant flag up. Oh, get back into position. Options chain. See, I'm glad I didn't jump in. Now, I gave me coffee. I got to pee and coffee. I've had too much water today. But I've really got a confession to make here in a second. Not a confession, but a reality check. I'm going to buy it. If it doesn't work, it doesn't work. 3 black crows. Well, wait for the 3 black crows. I'll wait for the candle to come next to it. Look at the 1 minute. Definitely at a support. But there's no signal. We'll just see the head and shoulders. Support, 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 support. Got one. Let's see if I got it at a good price. I'm up already 11%. %. Should have got 2 of them. It might be just like 10% days, you know. Just a little bit of drop. Come on, baby. Don't give up. That's 1 minute. Got a hold, got a hold, got a hold. Got an inverted hammer. Not going to do it. Still at support. What was resistance is still support. Dude, just knife. What are you trying to do to me? Huh? We're at 15%. 17. Give me 20. Oh. 1. Oh. Fuck, what's the price? What's the price of it? Fudge. Missed out. I'm out. I'm out. I'm out. $120. 2-minute scalps. Working for me. That one was 5 minutes. So we got $12.07 SPX 85 7750 calls at 5:10 out at 6:32. That's 278, 100,278. So the last 15 minutes, I made $278. It's a prop firm. I started using other people's money instead of mine. I don't know what simulated means, but just like any other account. I listened to that guy that's traded for 45 some years. He says, did you know that most of the millionaires and billionaires trade with other people's money? I said, what? That kind of rang the bell to me. You been around a while? Oh, it's been around a while. What the heck are you doing here? Franchise? Where was this from? Send me the link for this deal. Okay, we're coming back down again. I'm going to do this in my personal account and this one. Oh, Costco travel. I've been trying to get you guys to pay for my vacation. I can't get no one. I sit here 8 hours a day. This firm's going to give me one to Cancun. Whoa. Oh, low blow. Heart attack. My coffee's getting cold. I forgot about it. That's a $378 coffee. $278. Costco kid was a friend of mine. I'm constantly reminded. I'm constantly reminded to stick to my strategy. I'm constantly reminded, stick to my strategy. Wait for that 200, for the 10 to cross the 20. Gotta keep to the strategy. If it ain't working, it's best to get out of the trade and not trade on hope. It's best to get out if you're turning red. Don't trade on hope. Randy says I make 10 grand a week. I should buy people vacations on the street. lady cut my hair when I was young, and she called me Elvis. The lady cut my hair and called me Elvis. Just don't hold on to losing trade. That's all I made. We got a double bottom. Retesting the 3 black whores right now. On a normal day, I'd take this trade. We got 3 black whores. Double bottom now. I'm watching that inverted hammer. I don't want to go to the slammer. Stick to the plan. Stand. Options chain. Move it up to 77.40. This might be it. Oh, do you love the... What the hell? Mute buttons should be outlawed. Who likes it? I'm kicking you out of the room. Franchise? Goodbye. Bye-bye, franchise. I don't care if you served the country or not. You're not worthy. I want to give a thumbs up to franchise. He's one heck of a man. He stole my woman when he stuck out his hand. He was built like an ape. Man is in great shape. Okay, I got that out of my system. Looks like franchise getting whooped. Mandatory bid. I love rock and roll. I ain't what it takes to love me. Okay, I'm in. We're going to see if I can get a big sin here. If not, I'm going to get out. Where's my... You're down $40, Jim. You're down 6%. You got to hold this position. You want to get another one? No, not right now, because I'm green. I don't want to add a position. I don't want to add a position. Where am I now? Oh, Papa. Oh, we're back down to even. SPX 7750s. And I'm up. Oh. My. Oh! What a volatility. Risky. Risky, risky, risky. I'm up 17%. Oh shit. He's up 17%. He's up $100. He's out. Motherfuckers. They ripped me off. Trigger price was $5.50. They gave me $5.53. Oh no. Oh no. Oh no. Uh-oh. This might get serious. Should I buy another? Uh-oh. Uh-oh. Uh-oh, $6. Oh, no. 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 No, 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 no. I don't smoke it no more. With this account, I think I can do 10,000 a week. When I get used to it. We didn't break it, so I'm glad I didn't jump back in. Now we're squeezed. We're in between the 10 and the 20. It has to stay in there and get small. That candle has to get smaller. The body of it has to get smaller to stay in the squeeze. You understand what I'm saying? This candle has to stay in here and get smaller and squeeze, and it didn't do it. It came back down to a triple bottom. So I have one final time to get in this trade. Now I gotta piss. I don't know if I should go pee first. Nancy, come here. Give me a jug. No, I don't want your whiskey bottle. I want a fucking jug, man. Nigga. Okay, I'm in. Let's see if this works. If not, I'm out. Entry was $4. Hell yeah, that's good. I got a good deal. Actually, I got a good deal on the limit. Let's just see if we can break. Down $40. I needed to hold that support. Now we got wicks. Okay, I'm still safe with the wicks. %. Come on. I should be getting 2. I'm only getting 1. I should be getting 2. That's where I made my mistake there. No, at 439. Now, this thing breaks. This could be a nice triple top. Right now, you're in that squeeze, so this is an exit idea. If you're in this trade at that price, you're getting 12%. Oh God, come on. %. There it is. Come on. Exit if you're in the trade. Ah. Come on, you idiot. Fuck. Messed up. I was doing a limit. You know what? I don't want this to go down. Don't go down. I couldn't get out. I think I'm going to get out of it. I really don't want to. We're right above that 20, see? It's kind of giving me the jitters. I get out now for $100. You know what? Fuck it. Oh, no. Here I go again. Ah, damn, Jim. Out. And that's sold at the market. I sold it at the limit. Oh, I bought it at the market. And $530. So this is the SPX at 12.30.10. Buy at $4 a contract. I should have got 2 of them. That was my mistake there. Then when I tried to sell it, I kept putting the sell price in the entry box. So I had to keep waiting and finally got out at 5.30. So that's a $130 trade in 5 minutes. 5 minutes and 36 seconds. And if you do, like I've done here, 1, 2, 3, 4 trades in 2 or 3 minutes at a time, you'd be up $530. I can do this all day long if I wasn't here sitting around doing my thing. I can make at least 2 to 3 times more. I know I'm alone by myself. I mean, because I wouldn't be playing. I'd play more music, but I wouldn't be. I've always had this little entertaining thing in me. I was 3rd grade. I got in trouble, and the teacher said, "Jim, what are you doing?" And I said, "I'm doing the chicken dance." And she looked at me and said, "Why don't you get up on the desk here and show us your chicken dance?" And she thought she was going to try to humiliate me in front of a bunch of 3rd graders when I was the stud. So I got up there and I danced on top of the desk and did my chicken dance. So from then on, I felt like I was an entertainer. So it's in my blood. So here in the last half hour, let me see, I started this episode started the first trade at 11:45, and it's now 12:35. I did this on 2-minute scalps. That's what I'm calling music, yes. I guarantee your Jewish friends would love it, and I'd take away all your Jewish chicks. They get tired of the same old boring men. La 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 la. Yippee-yi, yippee-yi-oh. Oh boy, there she goes. There she goes. What is it at now? Does anybody want to? $5? I got out at 552. So what we got to do for me to get back in this trade, we had a triple bottom. That's an inverted hammer. That's bullish. That's bullish. And we have to break the triple top. Do you understand? To go to the 200. We got the crossover, and that's bullish. I think we're getting ready to break out, Randy. I think we're going to get ready to break out, Randy. $490 to $550. If I'd have took that trade there, I need one more. You're using the S, are you using the you lost it? Yeah. That was a bad trade. So we're coming back down again. You really can't trust nothing today. It's 420, Randy, the 7750s. But I'm not in them. I want to push my luck. I want to stick with what I got here. $530 in the last hour. If I just made $530 a day, I'd be happy. But my goal is $2,000 when I get used to this account. they're kind of talking to me like they want me to be a part of their business. Or an affiliate. But I think they're still smoothing out the rocks. It's brand new, so I wouldn't jump in it right yet. Am I in a trade? I don't think so. No. It says I'm showing profit. SPX is up, green, 2%. Adami 0.02, even. If I like this, I'm gonna start doing videos with them. But I got a lot to learn. I really don't want to learn no more. I don't. I'm too old to be learning. I just want to take it easy, work a couple hours a day and be done with it. But it could be, you know, like I said before, man, I've been at this 22 years. I'm happy where I am. But I got to have something else. You ready for a sad song? Okay, I've been wearing these hollow socks now for 3 days, and I swear to God that I have a lot more energy. The blood is circulating back up in my body, not hanging out down at the bottom. Feels like I have more oxygen. My breathing has even changed. But I got to be careful because that blood, man, you know, my legs are not swelling up. It's really a... I've never wore a pair of socks that... I mean, I was getting waffle marks right around my socks. Now I don't got any. I just got little stretch marks from the sock itself, but we'll see what happens in a month if my back pain goes away. I played hard. I played hard all my life. There's $120 if you'd have took that at 420. Randy, triple top coming up. Question has been asked. It's called Rick's Trade. let me see. But you gotta first achieve 10 grand out of 100 grand, and then they're just now making the rules as they go, so I wouldn't jump in until they're more established. But I'll send it to you. I want to get the affiliation when I get started, then I can get bonuses. You get 20%. You got to cash out early. You just can't sit it in there and keep it in there. And you got to be consistent. I don't know how to send you the link. Let me see. Let's pull them back down again. Shit. If you do want to join it, let me get Vegas's affiliate link. Okay? Oh, you already pulled it up. Thank you. It's it's a new one, so you got to it's got to go through all of its little, but you have to be consistent, like 200 a day, 500 a day. And right now I'm at 5 something, so I don't really want to push it. But I got to get 10 grand out of this account, and I've already done that. So I did another one, opened up another one. I'm gonna have 2 of them. Because when you go to withdraw your cash, it freezes until the cash is all took care of, and then you get. So I can trade with another account while the other one's being. Make 10 grand and take 80%. And you're not going to lose your money. And you have like a buffer. So they don't want you to make a lot of money. They want you to keep it minimal for now. But it's a good, I wouldn't suggest it if you don't have a strategy. You got to have confidence. Yeah. I'm going to go take an aspirin. A couple of aspirins. No, you'll get you got to go through a trial. What is this? Oh. Yeah, I might even go live. I mean, if I like this thing, I might just dedicate my channel to them and trade live all day long. You don't know if you don't try. Get off your feet and don't cry. I'm waiting for the next best trade. Let's look at the watch list. SpaceX, still down. We had a little bounce this morning. We did call bounce this morning. This is called a dead cat bounce. When something sells off hard. That's how I traded AMD. Made $700. NVIDIA, called the bottom on it. NVIDIA should be always the one you want to look at. So never chase. Wait for the pullback, and you got a double bottom. Snake, breakout, pull back, double bottom, higher low, boom, triple top out of the trade. AMD down $32. This will come back. Knock on wood. I have 3-day rule. When you get bad news, I don't think they had bad news. In fact, they raised the price target to $594. What do you think about that? Randy, it might be a good swing. No, yes, they charge a fee to get started. You got to pay a fee to go through the trial. Then once you go through the trial and you pass, I think you get a refund. And you got a month. It's just, give it a shot. 1 month. But if you do it, I want you to use Vegas's affiliate number, discount code, or affiliate thing. Anybody joins it. But enter at your own risk. You can scalp this strategy every 2 minutes and win. But if you sit there and buy the dip and hold it, you might get stuck. So I've been here, I scalped 3 to 4 minutes and I made 500 and, what does it say, 14? No, that's not mine. No wonder. Made 530.50, and that's good for a day. Nobody takes home 530.50. So that minus 20%, around $400. Then I got to pay taxes on that. But they're brand new, so I got to. It's like going to a resort that's been just opened and the food is half-assed and the customer service is not there yet. SPX is trying. God darn it. There's that triple top break. I yakking and missed it. $77.50 maybe. Ah, shoot, I should have grabbed that. I gotta go pee. Get some water. So this here is another pennant flag. Or actually, it's almost a megaphone. No, it's I don't know what to call it. Darvis box, triple top breakout. That's what it is. Inverse head and shoulders, the way I have it drawn. That was a good idea right there. I didn't take it. I was talking. See? Randy, you owe me $550. I'm gonna start charging. Randy said I was the best trader around. Didn't you, Randy? Randy said it. Hickory dickory dock, the mouse ran up the clock. You don't have to write out a big statement or nothing. You can copy and paste. Oh, maybe the best period. Did you see that? I love Randy. He's my best friend. Come on, get me in here. I'm in. Let's see what they gave me. They gave me $4.60. They gave me $4.60. I got to pee too, man. This was not a good time. Yippee-yi, yippee-yi-oh. Goes. Oh. Uh-oh. There might be a fist fight. Might be a fist fight. Just might be a fist fight. I picked the wrong time to trade this, I think. I really did. It's 1:09, my worst hour of the day. $4.60 entry. So if you don't feel comfortable in a trade, it's always good to get out even. I'm not done that yet. I want to see if we can get up here. We're above the 20 and above the 9. As long as I stay above the 9, I'm in the trade. If not, I'll get out. I don't want. Slash ES, we're above the 200 on the 1 minute. We're squeezing between above the 200 and the 63. Alphabet stock drops as Google loses another key AI executive. Whoa, come on. God darn it. What the fuck? Can't move that. Always something in the way. I'm up 6.8%. I'm up 8%. There's my 2 minutes. Now I'm back to even. What did I get in at? 460. Come on, let's just have one little spike for once. Shit. What is it? Come on. I got higher lows. Let's get ready to do something. Dadgummit, I missed that cheap price. Had to go piss. That always sucks. Still above the 9. The 9's going to keep me in this trade. Let's see here. Tempting to just get out of it. I'm feeling a little freaky, but every time I look, this looks bullish, so I don't want to do it yet. We could get right to there, or a double top. I'd say give it a month before you join that thing. Down 2%. Just taking his sweet time, and I appreciate it. I'll be happy to get 30, 40 bucks. Break it. Okay. The market still has jitters. We're at the 20 right now on a good day. So we'll see. We're squeezing between the 20 and the 9. I got another one at $4. So I'm back to even. Should have probably got 2 more. That would have done it. Yeah, it's not in a too good of a breakout mood. There you go. A little more. It's going to be one of them trades where I just get right out of it and it's going to pop. Fucker, come on. Now it's just coming up snug against resistance again. And it doesn't want to be free. We got in this, I would call it an ascending triangle. Getting tight. One minute still looking good. Come on, break out. You want to. I know you do. Sometimes I get to think, okay, you know, you give it up. An hour. Damn it. Yeah, they didn't. Like I felt it. I felt it coming. We're back at the 200 on the 1 minute. Still above the 20. The hard one. I'm still bullish, still okay over here. Got an ascending triangle on the 5 minute. We're getting ready to squeeze. So I've had 2 bad trades this week so far on the strategy. And one of them I'm not going to count. Definitely count today's. It's hard to fight them right here. So nice setup. Come on. You can do it. On a normal day, I'd be taking this trade pretty happy. And we're getting ready to squeeze right now within any minute. Come on, break out this time. It's tough. I'm not sure if I should sell it. If it breaks out, it's going to be a good one. Okay. Let's do it. Come on. Oh, what have I got here? Oh, shit. I got a put call? What's this? Oh, man, I don't know how... What have I done? What have I done? How do I sell it? Oh, God. Can I sell it to market? No. I don't know what I've done here. I got to put in a call. Anybody know how? I guess I just sell one at a time. I don't know how I got a put and call, but I did. I don't know how to sell it. I don't know how to sell it. Fuck. Okay, let me see here. It says I got... Man, I don't know how to sell this. I don't know how I got both put in the call though. How do I? Anybody know how to sell this thing? I got a put and a call. I'm not looking in the chat. Share the screen that you bought. I got a put and a call. And I'm losing on it. I didn't buy that though. I bought a single call and added it. Fuck. Man, this sucks. I didn't buy a put. Just keeps going down. I'm not, it's hardly nothing anymore. It says here about two calls. Shit. 50% gone. We're to the right shoulder. I don't get it. I don't know what to do. I don't know how to sell them. What do I do? It's just I got to figure out how to sell these when it gets back up, and I don't know how to do it. I don't know what the fuck I'm doing. Do I? No, that's not only showing one of them. I don't get it. I gotta know how to sell these. Now I can't pull up my other. Oh my God. What have I done? Okay, I got rid of both of them. What the? See, I'm in a bad spot because we're kind of bullish, but we're definitely bearish on the 1 minute. I was up like $250 and I couldn't figure out how to freaking sell it. I still don't. If I sell it now, I'm just up. I lost $400 on my account. And I don't know if it's going to go back up because that big candle right there. It's taking its sweet time. And I knew this is my hour where I don't do good. Let's see. I'll try to figure this out. I thought I just bought 2 calls, but I had a put. Had a red one. And it's not gonna let me sell it at the limit. I don't know how to sell this thing. Get out of it so I can just fucking not worry about it. No. It says I got 2 calls. That's what it says. It says I got 2 calls long, and I'm down 50% on them now. This is not good right here. Retail investors are buying SpaceX stock before more shares flood the market. And I'm up $89 in my account now. I'm definitely bearish here. Break it. We're at the 9 on the 1 minute. 5 minute. This is the strangest thing that's ever happened to me. I don't got in a trade. I don't think I know how to sell. Where's the spread on this? Not much. We're going to get more drama. Going to do it now or not? This is it. Do it. Okay, I'm at resistance. If it breaks the 20, better get out. Now we're above the 20. That don't mean nothing, though. Because the 10 is down below the 20. There's a lot of shit on there. It'll be a trip if that thing bounces back up. All this frickin' worry. $239. I'm almost happy with that for the day. Well, it took a pretty big dive on that knife, that 10. They're a really, 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 really rough day today. I can see it in the tape and the fight. It's like a tug of rope. All day long like this. I've been in this trade way too long. 3, yeah, it's almost my limit. I'm about ready to just get out. Because you got a hard resistance right here and we didn't break it on the 5-minute. Fucking baby candles again. Let me see how far down. I'm down 42%. See, this is bearish because you got the 9 down below the 20. I get one big old fucking, one fat candle there. Should have bought the dip. Okay, now I'm above 200 now. Give me back to 3. 239, there we go. You know, it's going to be one of them things here. I sell it and I'm going to regret it again. But I want to have a green day. Don't go down. See, that's it, I don't like the wicks on the top. Definitely a hard one. Not an easy scalping day. Back down 50%. Should have took that 40. Okay. I think I'm going to refresh here. I don't want to add on because I'm just not feeling that bullish. Hormuz is open and the stocks run. Can't believe I was up on this. 7 minutes to power hour. Five, 4, 3, 2. You have to break out of the box. Well, right now we're kind of this alligator claw. But if we can withdraw all these here, I knew it was getting a little bit too late here for this thing to break out. I was starting to question it. Yeah, they're not moving it at all. I got out of it. That wasn't pretty. Didn't quite understand what happened there. Three more minutes to power hour. I was real confused in that call for some reason. When I saw that sell and buy, I didn't remember. I don't know what I did there. I don't want it to do it again. Man, that sucked. 160. Now watch it bounce. It went up on that right shoulder. No positions. I have to wait until it breaks out of this box. You're seeing weakness? Yes. Man, I was up on that thing. I should have just pushed the button and tried to sell it. I did at the end, but when I saw that red and that green, I'm going, I didn't buy a straddle. I bought 2 calls. Pissed off. Let them try to make his back. What'd I do, V-Whopper? Sergeant, what'd I do? Fucking little bitty baby candles. Oh, that'll help. Now see, the damn 10 wants to cross the 21. So I'm down $12 in this account now. I was up $5.30. Double top on the video. Blanket. Come on, baby, break. Oh, how many I got here? 3? Yeah. $135. $195. Keep going. Now we're at resistance again. Cockroach. 135. I'm out. I'm gonna have to scalp a few more here. $120. 180. Okay. $745 calls at 260 out at 3. 3 of them. Back to 3. What did I give on those last ones? 260. Need one more good trade. We're back at the 9 here, but this market's not been clean today. Okay, see what I got. I've got 235. What the hell? Went to 13. %, 19, 20%, that's good enough. Come on, a little more. Out. Not what I wanted, but good enough. I don't know what I got screwed up on there before, but that really threw me off. When I saw them two things up there, that red and $235, now at $260. I'm just trying to build her back up. 3 of them. Well, I can put that there. Now, what are these at? We got out at 260. They're at 280. So we got a triple top. We got a V recovery. We got an inverse head and shoulders on the 1 minute. We're still in that box on the 2 minute. We got a triple top here. Dadgummit, there they go, $3. I'm not in nothing, I hope. No. I got out at 280. So 260. That sucks. It's another $120.
Yeah. Yeah. Jim's back, trading the king on his throne. Punta Cana's gone now, he's back.
3 white soldiers. We're still above. I'm gonna get back in. Triple top break. Break it. Oh, well, we got that up. 8%. Give me 10. Come on, you bitch. Now you're doing. I'm out. Not one more. Okay. Now with that one. $285 to $330. And then what is it at now? $3. Oh no. I got out in time. Very good. I got out. That's no doubt. $285 to $330. Now I've almost made. I got 300 more to go to break even. I mean, not to break even, but I'm up 306. I should just quit. Fuck it. I would be up $800 if I didn't take that trade. It's 2-minute scalps today. I mean, what do you got here? We got some insight here. I've really jumped a limb here. I've started a new strategy with a new outfit. $300 is good enough day for a day like today. I feel like a virgin again. I gotta get some water. Take a chill pill. And then I'll miss this frickin' run too if I do it. There's 270, 330. You need AK? Would you let me have your girlfriend? Will you let me have your girlfriend? I'm holding my chest. It's too cold in here. Might have to turn the degrees up to 75. Oh God, it's 77 degrees in here. It's freezing. SNXX, I need to relax. I'm gonna get some aspirin. There she wants to go. So YouTube, I was at 800 down, 600 down to 12, now back to 3. We're bullish, but we're still above the 200. We're still below the 200. If the 200 was below this, it would be very bullish. My opinion. And you get to a resistance and it wants to give up. Very choppy.
Really leading to the flows we're seeing. Semis too, I think we get so trained to think it's NVIDIA. It's so much more than NVIDIA. You're talking about equipment companies, you're talking about memory companies, and so something like the SOXQ, SOXQ from Invesco, the Philips Semiconductor Index is seeing tremendous flows this year, over $1 billion. Again, cross investor type, because it provides you diversified access. A lot of the semi indexes that are out there are highly concentrated. And so I think investors are seeking a way to get more diversified exposure. And the good news is, we talked about sort of bring us full circle, the NASDAQ 100 has tremendous exposure to the semis as well, but you can get an even broader exposure to broader innovation.
And so as we look at how much more diversified the semi space is and some of the available offerings are, do you view that as the overall sort of bull market that we've seen in semis?
Oh, yes, Marley.
Becoming a healthier bull market than we had over the past 2 years because it isn't dominated by NVIDIA all the time?
We're at 250. Are we going to hold the 9, the 20 this time?
For that bull market. And so absolutely, as you're seeing,
Or are we going to come down and do a triple bottom and break below it? That's the question.
One semi or a broad.
She said broad, so I had to erase it. I don't tolerate that kind of talk in here. Shit! Did I make it? Oh, I don't think I made it. I got 260. Okay. Now let me see. How to have that? Options chain. Orders. Come on, break out. Hold it there, baby. Uh-oh. That's not working. Jeez. Oh, I didn't even look at the clock. 2:31. Just like that. $234, $334. 3 black crows with a tweezer bottom and a hammer, or a spinning top. I bet today we get a big breakout. We got to break this resistance line here. That don't make sense. You want to go pick up your son? $2.39. $77.36. Come on, baby. Boeing has taken off. Do something, bitch. This is a weird freaking stock right now. We're coming up to the 9. Amazon down $5, Google down 15, and AMD down 34. Now I don't get this. Right when we hit that 9, now they got the 9 crossing down. One minute. Now you're at resistance again. What's SpaceX doing? I keep saying buying the dip on SpaceX. They ain't buying shit. That sounded like a trap. Real hard to break that 10. And we're at the 63 and the 200. So that's a hard resistance too on /ES. AMD pulled back. Damn. $16 more minutes left in the day. A lot of heavy wicks on the top today. Little 2-minute scalps. That's the only way to do it today. I kind of like this one here, but it's got to break that 9 or it just ain't 10. No. Just having a hard time. What should I do, Jimmy? Definitely giving up. Oman reached Hormuz route agreement and the market's mixed. That's what you've been wanting. How can it be mixed? SanDisk. Come on, break the 9 so I can get in this thing. Yeah, it ain't gonna come up. One more minute, volatility kicks in. There's an alert. Glue. That must be an old one. Triple bottom. Now watch this motherfucker break out like the old days. All of a sudden, buy signals are coming in. Huh. The 1 minute hit the 200 and bounced back. So did the 2 minute. Oh, that's 1 minute. We got 10 minutes left. Two 352.
Which is a 10% over expectation beat. Phenomenal return. And
BLMN.
10% higher than a year ago. Now, what drove the performance? It's modest gains in total revenue, things like cost management and increased prices. Those were helping to offset the higher labor costs, the advertising, the food costs. So they were able to pass along a lot of those costs to the end consumer. Now, this helped raise their restaurant level operating margin to 12.4%. Really, really nicely, especially if you're a restaurant.
Is that good?
Comparable sales across all restaurants were about 1.5%, but Bonefish Grill was your standout winner here, with comparable sales gaining 1.8%. By the way, all of those beat expectations. Now, Sam, as we are seeing with a lot of the double-digit returners during this earnings season, forward guidance saying that comparable restaurant sales are now expected to be up 1 to 2% instead of 4% to 2.5% is doing a lot of the heavy lifting today.
Yeah, it's so fascinating when we talk about this because obviously it's so tethered to consumer trends, how people are feeling. It's incredible to see companies, as you say, with cost efficiencies trying to adapt to people trading up, trading down, what they're, in the business of buying, how much they're willing to spend on, going out for dinner. Let's talk about the stock performance though, because I don't know. I mean, year to date, it kind of looks like a tech stock. It's up like over 90%. Just walk us through what you're seeing here. I mean, obviously this 32% pop right now is helping.
It is. Well, you've got them up 92, 93% or so year to date. Compared to Texas Roadhouse and Darden, their closest competitors, they're up only about 11%. Now, what's the difference here? When you saw 2024 roll around, that's when Bloomin' really started to come down. I mean, it lost more than half of its value for a period of time there, whereas Texas Roadhouse and Darden were not struggling quite as much. So this is more of a reversion to the mean type of story, I think, Sam, as opposed to, uh-oh, we're looking for a breakout win. One of the things I would
5 more minutes left.
there, though, is Black Box Intelligence, third-party non-affiliate. They look at same-store sales and traffic at thousands of restaurant locations across the country. Same-store traffic, this is amongst every restaurant, not just Bloomin'. Same-store traffic is down a 15th consecutive negative traffic month, even though same-store sales have been rising. So there is menu price inflation that is masking a foot traffic problem. People are paying more to eat out less.
Yeah, and I was going to say, because we often talk about this cattle inflation, obviously the beef prices having to be fed into what they're putting on the menu here, whether they are indeed passing that on to the customer, whether the customer is willing
Double bottom on
to pay that
SpaceX.
price point, so that seems to be working out for them. What is the key metric, do you think, with some of these types of brands, particularly in the business of this stuff, that is key to look over at over several quarters to come?
Really great question. I think loyalty is the biggest thing. One of the things that Bloomin' did that set itself apart from Texas Roadhouse and from Darden's, they revamped and revitalized their loyalty.
On a normal day, I'd take this trade right here.
To their restaurants more often as opposed to a one-and-done experience. So they're seeing much improvement in that space. They're also starting to get a little bit more focused. Texas Roadhouse and Darden's has known their lane for a very long time, whereas Bloomin' has kind of been a little bit all over the place. They've shed some Outback restaurants, and they're starting to get less complex with their menu items, and I think that's starting to draw in a little bit more of the consumer that they're seeing, more of the blue-collar, working-class individual that they want to make sure comes back time and time again, Sam.
Stick to what you know. Jeff, really appreciate it. Thanks so much for the breakdown today. Jeff Avalos there from Charles Schwab. Marley, I'll send things back over to you in Chicago.
Thanks so much to Sam and Jeff for that. We are nearing the end of our market session. Alex Coffey will be joining us to close this one out. Plus, we've got earnings coming your way after the bell. We'll have reports from Western Digital, SanDisk, AppLovin, and Elf Beauty. That's all next on Market on Close.
Data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better.
Oh, that's a weird-looking picture.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, I had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial...
Jim is your financial advisor. Well, a tough day today. Definitely the market was in a very consolidated mood. Two great days and then the consolidated mood makes a lot of sense. But we didn't really move much. We did, but we didn't. There we did there. Damn. Jeez. I didn't see that. Wow. Huh. That was a big sell-off. Look how big that run was. We could pull all the way back to this gap. Well, I'm going to get out of here. We got a couple things I got to do.